السلام عليكم.
وعليكم السلام ورحمة الله وبركاته. Dr. Zahid, how are you?
Assalamu alaikum warahmatullah. Yes, I'm very fine. Madam Umar, how are you? Alhamdulillah.
Alhamdulillah, all well.
Assalamu alaikum. Alhamdulillah, Brother Zahid. How are you?
I'm very fine. Alhamdulillah.
Brother Amar, our registration or our attendees did not reach 100 yet, though we have more than 460 registrations. So maybe it's good to wait, or shall we start?
Let's wait for at least maybe 3 to 5 minutes.
Yeah. Yes, perfect. Perfect.
I was actually in the midst of a meeting, so I have to just get out for this thing.
Okay.
For opening remarks. So I will go back to the meeting. But anyway, I can wait, no problems. Yeah. Thank you.
Thanks. Brother Umar, 10 minutes have already passed.
I think we can start, sister. I think we can start, and we can see there are some very senior people in
Alhamdulillah.
the attendees. So if you can just promote them, like so Brother Shad Mahmood and others, just have a look at it.
Inshallah, no problem. So Bismillah ar-Rahman ar-Rahim. والصلاة والسلام على نبينا محمد وعلى آله وصحبه. Assalamu alaikum wa rahmatullah wa barakatuh. On behalf of AAOIFI Secretariat, it's given me a great pleasure to welcome you to this public hearing on the exposure draft of 2 of its auditing and assurance standards, which are the SOAA1, the framework of auditing, and the SOAA for the auditing requirements for assessing compliance with Sharia principles and rules. We are holding the public hearing in English language and in partnership and collaboration with the State Bank of Pakistan and the Institute of Chartered Accountants of Pakistan. So let me take you through the agenda of the session. Our first 10 minutes are allocated for the welcoming remarks. Then we will start the discussion. Inshallah, at 12 p.m., we will have a 10 minutes prayer break and we will conclude by 1 p.m. Bahrain time. So we have 3 hours to present the exposure draft and take your comments. So without further ado, I would like to invite Dr. Zahid Rahman Khofer, who is the Director of the Islamic Finance Policy Department at the State Bank of Pakistan, as well as a member of AAOIFI Governance and Ethics Board, to present or to deliver his welcoming remarks. Dr. Zahid.
Thank you, Sister Zahra. Assalamu alaikum wa rahmatullah. Bismillah ar-Rahman ar-Rahim. And first of all, let me welcome you along with Sister Zahra, all of you in this public hearing for these 2 standard and exposure drafts. Mashallah, as Brother Umar mentioned that, we have over 100 participants already. So we some senior scholars and some senior people from accounting and auditing profession are here. So I really welcome all of you to participate in this particular document. So for the first of all, let me apart from welcoming, from the State Bank of Pakistan side, first of all, the AAOIFI has been instrumental in the role at the international level. We recognize we have been part of the AAOIFI's work since a long time. And what we have been doing now in the State Bank of Pakistan, that we have started with the Sharia standards. So we have already implemented about 40 of them, and some more are under review. We are also looking at the accounting standards and even the auditing standards of the AAOIFI as well, inshallah, for the implementation with the help of ICAP and SCCP and other stakeholders. We are also looking at we have actually went through the entire exercise of looking at the recent update into the Sharia governance framework. And we looked at the recently issued Sharia governance standards of the AAOIFI and of course the IFSP. And we incorporated most of the new requirements of the AAOIFI, and it was very useful. Our new Sharia governance framework has been taken very positively by the market. So we are happy that AAOIFI standards were very helpful for this purpose. And we also see that, there's a lot of demand in the market, in Pakistani market, that, we actually review all the standards, international, which have been issued by international standard setting bodies like AAOIFI. And we are, alhamdulillah, incorporating, and we feel that it helps us. It is helping us to harmonize our, regulatory practices and regulatory framework. For these specific standards, these 2 exposure drafts which have been issued, I think this is, I'm not sure, it is the first time that it is a revision of the earlier ones. But as I understand that, the whole idea is that to offer detailed guidance on how an auditor will ensure adherence to Sharia rules and principles in the financial statements. So it outlines the responsibility of auditors in assessing Sharia compliance, including interaction with Sharia supervisory boards and understanding the governance environment. So inshallah, we will also, in our market, we will also look into this standard when we reach to that point. And so similar to our previous, hosting of the exposure drafts, we will, inshallah, will be happy to, continue to work with AAOIFI in terms of the development of standards, in terms of the implementation of standards, in terms of capacity building of our market. So all these 3 areas we have been closely working with AAOIFI, and we always take honor of the support which is provided to us by AAOIFI, by Brother Umar him personally, and colleagues like Sister Zahra and others. So we look forward to participating in this public hearing. Inshallah, this will be quite beneficial for finalizing this standard and inshallah benefiting the industry. Thank you so much.
Thank you very much, Dr. Zahid, for your welcoming remarks and kind remarks as well. For my remarks, I will just talk briefly about a couple of points related to the standard development process, as well as the approach for managing this session. So if you allow me to start, these 2 exposure drafts are the outcome of AAOIFI project on the revision and update of the auditing standards. So this project was initiated after the approval of AAOIFI governance and boards in 2019. The first outcome was the framework of auditing, the SOAA1, and it was issued in 2023. So after the issuance, alhamdulillah, in the first quarter of 2024, more specifically during February and March, we managed to hold 2 public hearings for the first standard, which is the SOAA1 framework of auditing. In 2024, that is like 5 months ago, more specifically in December, we issued the second standard, or the second exposure draft, which is the standards on auditing and assurance for the auditing requirement for assessing compliance with Sharia principles and rules. So this second standard, or this second exposure draft, the SOAA4, is actually has been recently issued, and this is the first public hearing for this exposure draft. This is what already happened. What will happen next? In the next 2.5 months, we will complete the public consultation process. So inshallah, by end of June, we will finish all the public hearings which are planned. We have, of course, tentative dates for English and Arabic as well. But we need, of course, to finalize, and you may check our website and social media platform to join us, inshallah, in the next sessions as well. So in terms of after the completion of the public consultation process in 2.5 months, we will compile all the comments and then present them to the relevant committee and board, and in this case, the AAOIFI Governance and Ethics Board, and issue them as final standard according to our plan, inshallah, by the end of this year. So this is about the standard and its development. What about this session? This is a public hearing session, and just like all our public consultation events, including the public hearing sessions or even roundtables, or our objective is to learn from your experience, to get your feedback, and therefore we welcome your comments on the Q&A tab. Inshallah, if time permits, and depending on the flow of the session, we can allow for verbal comments as well, or verbal contributions. And if after this session, from today until 2.5 months, by the end of June, inshallah, please feel free to share your comments on our email, governance@aoifi.com, and we will definitely present it to the relevant working group or the relevant committee in this case, and board. This is it from my side. Now I would like to welcome our Secretary General, Brother Amar Mustafa Ansari, to start the discussion. Brother Amar.
أعوذ بالله من الشيطان الرجيم بسم الله الرحمن الرحيم رب اشرح لي صدري ويسر لي أمري واحلل عقدة من لساني يفقهوا قولي. Good morning and good afternoon to all of you. Welcome from my heart. Thank you very much, Sister Zahra, for all the coordination work and all the initial remarks. Thank you very much, my dear brother, Dr. Zahid, for your kind remarks, for all the support that you have been providing to AAOIFI in different roles. And again, it goes without saying that ICAP and SBP are our members. not from now, from SBP maybe nearly 25 plus years, I think, and ICAP 20 plus years. So it's a long association. ICAP and SBP are always well represented on AOIFI's respective boards as well. So this is a long ongoing relationship that is there, and we are so much thankful to both the organizations for supporting us in this public hearing event in particular. And this is like, something, again, being personally from Pakistan, it's like, a personal association. ICAP is my mother institution. SBP is an institution I've been associated somehow, like, as a, in different capacities, like trainer, like consultant, since now more than 20 years. So it's all like, always, it looks like you are back home. So thank you very much, everybody, for that. Thank you, everybody, for joining in. Let's now try to come to the topic, because the initial remarks, I think, were comprehensive enough. Coming to the topic, before I share my presentation, I need to talk something conceptual about the need of auditing standards and the AOIFI strategy about the auditing standards. And I would like to mention that this maybe take a few minutes, but this is something that needs to be understood while we go for the review of the standard and go for the proper, I would say, proper discussion and dialogue on the standards. So AOIFI, as the name depicts, Accounting and Auditing Organization for Islamic Financial Institutions, initially started working on accounting and auditing standards. All other standards were added later. So this is like sort of something that that is like, part of our fundamentals, that we need to work on these areas. Auditing standards that AOIFI started, they started with a very unique concept that, like accounting, there are some specific needs of audit of Islamic financial institutions. And the founding institutions of AOIFI, including Islamic Development Bank and the initial supporters like Central Bank of Bahrain, they were all having challenges with regard to the accounting and auditing part in the absence of any unique specific standards addressing the issues of accounting and auditing for Islamic financial institutions. Now, why audit is different? There is an argument, again, like we have this argument all the time on the accounting side, and let me touch upon that part as well very quickly, that there is a view that accounting and auditing are neutral, or we can say they are secular. They are not impacted by any religion. I think to some extent we can agree to that part, to some extent. But the question is, what is accounting? What is auditing? There was an initial learning phase for myself as an accountant a long time back, when I learned one thing: accounting is the language of business. It is actually reflecting the business into numbers. And we all understand that all the accounting frameworks around the globe, actually, they talk about the information needs of the users of financial statements. So the question on the accounting side that we try to address is that what are the business models of Islamic finance and how they are reflected in a fair and truthful way, in line with the essence of the business itself. So again, as I said, that the purpose right now is not to delve into the accounting side, but we need to understand that for Islamic finance, when you talk about a user of financial statements, there are several things that need to be understood. Number one, because of the unique business model of Islamic financial institutions, at times the information needs of the users are different. Not only this, even if you have an argument that accounting or auditing need to be neutral and secular, and that should not be impacted by religion or religious beliefs, which to some extent I personally may not fully agree on the accounting side, but even if you take this argument, You need to understand a very important element here, that the information needs of the user is something that is fundamental to accounting and auditing. So what are those information needs, and are these impacted by religious beliefs as well? Are account information needs impacted by the legal system? Yes. You know, auditing standards have that standard on considerations of laws and regulations in the audit of financial statements. Why? Accounting and auditing should be neutral of anything. No, we say that, okay, these cannot be completely neutral of the laws and regulations. Now, when we talk about Sharia, on one side, Sharia includes the individual beliefs, and on the other side, it reflects a legal system. It reflects a legal system in which you cannot earn money on money. Not earning money on money means you have to earn money against economic resources. Allah subhanahu wa ta'ala says, وَحَلَّ اللَّهُ الْبَيْعَ وَحَرَّمَ الرِّبَا. It means that Allah subhanahu wa ta'ala has prohibited money on money transaction. But Allah subhanahu wa ta'ala has allowed you exchange transactions. Exchange transactions are where on one side there is an economic resource and on the other side there is money. According to Sharia, money is not an economic resource in itself. It is primarily a medium of exchange, and in some situations, a storage of value. But it is not primarily a medium of exchange. Hence, it is not allowed to earn money on money. You need to convert money into assets, into commodities, into services, into entrepreneurship, into business ventures, and through taking those risks on the underlying transactions and assets. Because as per Sharia, risk and reward go side by side. So you cannot take risk-free money unless you take risk on the underlying assets. وَحَلَّ اللَّهُ الْبَيْعَ وَحَرَّمَ الرِّبَا means that exchange transactions are permitted, money on money transactions having return thereon are not permitted. Now, let's take example. What we use a term, and that is actually a term that we need to understand when we are talking about all these auditing standards. There is a term called Sharia conscious user of financial statements. Now, who is a Sharia conscious user of financial statements? Is an investor or a stakeholder of an Islamic financial institution or other entity who has the consideration of Sharia for the business purposes. So if I'm a Sharia conscious user of financial statements, and if I invest money in for example, a common entity, forget about Islamic financial institution. It's not only that I'm concerned about earning, because obviously when I invest, when I do business, I need money. But I'm concerned about earning halal money, about permissible money. Because impermissible money, for me as a Sharia conscious investor, doesn't make a sense. Even if I get a haram money, I cannot use it for my own personal purposes. I need to give it into charity. So for example, I invested in a company that was originally permissible, but it turns out that it is doing impermissible activity and having significant interest-bearing earnings, etc. What will happen? In the end, I'll have to sell that company shares and will have to pay into charity. That is the Sharia rule. This is just one of the examples to identify how the personal beliefs and how a Sharia-based financial system changes the information needs. Now, as a user, I need to have enough information with regard to the activities of the institution and with regard to the permissibility of the income that has been earned. Not only this, so that is one part, is the Sharia part. That requires a unique set of financial reporting. And again, when auditing is done, auditing is to ensure that the user of the financial statement gets true and fair view according to a framework. And that true and fair view, in my framework, in my paradigm, For my paradigm, interest is not something acceptable. So if it is not acceptable, I do not want my income to be involving interest, which means I need to have interest or other impermissible activities. So which means that I need an assurance as a user of financial statements of an entity, particularly when we talk about Islamic financial institutions, that the income earned was from halal sources and the institution has followed Sharia principles and rules to ensure that whatever I earn, whatever my transactions with the institution are, they remain Sharia compliant. So any stakeholder who is a Sharia conscious stakeholder needs assurance on the Sharia compliance part as well. Now coming to the second part, which is equally important, not no less important. So normally I give this example a lot of times. Some of you who have listened to me earlier might have listened to that example as well. So for example, I may request and go to Brother Zahid and say, Brother Zahid, I need $1,000 as loan. And after 1 year, I'll be giving you back your loan along with an interest of 10%. So I'll give you 1,100 after 1 year. Now, this is a simple business transaction which is happening everywhere. But maybe if you become neutral on the beliefs part as of now let's go to the transaction itself. So it is a loan transaction. Brother Zahid is lending me 1,000. I have to give him back after 1 year 1,100. Now, what Brother Zahid is concerned about? I would say Brother Zahid is concerned about my credit worthiness. He need to see, oh, Umar is working on a good job. He has the capability of paying back this one. And maybe Umar, he may, if he feels unsecured on that part, he may ask me to put a security with him. Let's assume that both of us consider this as a permissible transaction. We are not concerned with the Sharia part of it. We may have this transaction. So if I take that money from Brother Zahid and the notes of $1,000, I make cigarettes of them and just smoke them in front of him, will he be concerned? Yes, we cannot say he will not be concerned, but then he will see, okay, what is the credit worthiness of Umar? What is the payment capability of Umar? Will he be able to pay me back this 1,100 after 1 year? If it is okay, then he's least concerned about what I do with that money. He will be concerned if he has doubts on my capability of payment. Or if he has good enough security, he will say, oh, Umar, such a stupid person, he's spending and wasting this money. But I have the security, I will liquidate the security after 1 year if he doesn't pay. Now, this is a common interest-bearing transaction that we are talking about, where the main risk is only the credit risk, and it doesn't matter how the person is using the money. Okay, a lot of you will say, no, we are in the banks, we see how the money is used and all that. Okay, you do it only to ensure that Umar is remaining capable of paying you back the money. Otherwise, we can see all over the world, there are transactions, interest-bearing transactions, is of spending-based transaction, consumer transactions. You just see what is the capability of Umar for paying. I can just go on a lavish trip for on the seas. Brother Zahid will not be concerned if he understands that Umar has the capability of paying this money. But now let's take the example otherwise. And I go to Brother Zahid and I say, Brother Zahid, I have an investment opportunity for you. If you can invest $1,000 with me, I think that I'll be able to invest it in a good venture. Out of that venture, we will be getting some profit. My expectation is that your profit will be 1,100. That is, with profit, I'll be able to pay you back 1,100. Your profit will be expected to be 10% per annum. What changes here? Okay, yes, it becomes Sharia compliant as a mudarba or musharaka transaction. But other than that, still there is an element. Even if you become neutral on the belief part, the business transaction structure is different. The different business transaction structure requires that Brother Zahid need to see how do I use that money? How do I invest that money? What is the stewardship? In the accounting, we call it stewardship. In governance, we call it fiduciary responsibility, whether I'm fulfilling my fiduciary responsibility properly or not. So if I make cigarettes and smoke it, what will happen? Brother Zahid will be concerned as an investor, as an investor in my business model. He will be concerned about as to how I manage the money, how I manage the underlying assets. So this is the point where AOIFI considers that Islamic finance is unique. And there is a statement that I make a lot of times. Let me make that statement again before now. After this, I'll conclude this discussion and we'll move to the presentation of the standards. But this whole discussion, I can tell you that has been fundamental for the discussion. So when we talk about Islamic finance, we believe that Islamic finance has two different unique aspects. Number one, the beliefs of the investors, the beliefs of the stakeholders. The Sharia conscious stakeholder needs to know that the transactions, the business has remained Sharia compliant, that the earning that they are getting from the institution is Sharia compliant. That is number one, compliance with Sharia principles and rules. The second part is because of the unique business model, since the stakeholders take risk on the underlying assets, they take risk on the transactions, they take risk on the underlying ventures. They need to know more about the fiduciary responsibility and what we call in the accounting terms as the stewardship of the institution, the stewardship of the management. So the financial reporting need to take into account the specific Sharia law, specific Sharia requirements with regard to compliance with Sharia principles and rules. And then on the business model side, it needs to be ensured that the stewardship is there, the fiduciary responsibility is being fulfilled. And that is the crux of what we do on the accounting and the auditing side. Let me make that statement that I was referring to. We make a statement at times, we say, Islamic finance is different. It is different from conventional finance. If it was not different, it would not have existed. There was no need for it. Islamic finance is different. And if it was not different, then it was not needed. It would not have existed. And now a counter statement. If it is not different, and if you cannot prove it is different, then it's not Islamic finance. Yes, we know that there are similarities. Yes, we know we are living in a dual banking system. Yes, we know that the overall paradigm, overall regime in which Islamic finance is operating was developed primarily to cater for conventional finance. So we have at this point of time lot of overlappings, lot of mismatches. But if it is not different, it is not Islamic finance. If it is not different, it was not needed at all. And where it is different, when we talk about accounting and auditing perspective, it is different in the perspective of compliance with Sharia principles and rules, and it is different in the context of the fiduciary responsibility or the stewardship, where the information needs of the stakeholders are different. And accordingly, the auditing also needs to take into consideration those specific aspects. With that, now I will move to the standard itself. Now, very quick brief about the first standard. At this point of time, AOIFI has 6 auditing standards in place. Earlier, we used to call them auditing standards. Now we are calling them standards on auditing and assurance. Standard number 1 is on the general framework objectives of audit. Then there is standard number 2, 3, and 2, 3 on the terms of engagement, and standard number 4 is on the Sharia principles and rules consideration. Standard number 5 is on the fraud and error. Considering the alignment with international standards, AAOIFI has a policy that we try to align with the international best practices, that is international ISAs on the auditing side and IFRS on the accounting side. We actually work closely with the with the IFRS Foundation and ISB as well on different areas. We are trying to align our standards as much as possible, except for two things. As I mentioned, Sharia compliance, we don't compromise. We believe there are elements of Sharia compliance that make the accounting and auditing different. Similarly, we talk about the unique business model, and we talk about the considerations that are there. So with that, now what we are doing, the sixth standard is on external Sharia audit. Now, the first 5 standards on the financial audit. Now, what is happening that these 2 standards that we are going to review today and have your comments, these 2 standards are going to replace the first 5 standards. So first standard will replace standard number 1, 2, 3, and 5. And the second standard that we are going to discuss is SOA 4 will be replacing the current standard number 4, which is on Sharia principles and rules. As Sister Zahra mentioned, that SOA 1 was issued earlier, but we conducted several public hearings, but then we stopped. We had an idea to hold the public hearings together. Now, with your permission, I'll share my screen. Okay, so this is standard number 1 on the framework of auditing, which will replace our current 4 standards. I have given you enough brief about the initial aspects. So from that part, I will normally, as I normally do, I will skip the introduction and preface part. These are long standards, particularly standard number 1 is quite long. So I will not be reading all of it like we try to do in some of the public hearings. I'll be taking you through each of the section and will give a very short brief about it, and will be requesting your comments on that one. What I have mentioned, just to repeat the rationale part, the AAOIFI SOAs, including the SOAA, now we are going to call them, Standards on Auditing and Assurance. The final name will be with SOAA. SOAs are developed in line with the revised AAOIFI auditing standard setting strategy, considering the aspects that need to be considered by the auditors of financial statements of the institutions and entities that report in line and comply with Sharia principles and rules. These aspects inter alia include the information needs of Sharia-conscious stakeholders with regard to as to whether the transactions conducted by the institution are Sharia compliant. This is based on the premise that such users of financial statements are not merely interested in profit, rather they are equally concerned whether Sharia principles and rules have been complied while earning such profit. And the business model and the transaction structure in case of various Islamic financial institutions and structures, as well as their other Sharia compliant institutions, for example, social finance institutions. Sister Zahra, if you can make a note of it here, which are at most times are different from the conventional institutions and hence are subject to specific financial reporting requirements. So the summary I've already provided, so I won't be taking you in detail. Obviously, we are open to take any comments. Now the question and request, please put all your questions and comments in the Q&A tab so that we are able to keep track of it. Just to confirm, if Sister Zahra, you can confirm if the slides are moving properly, because in recent past, we had several times problem with PowerPoint. So if the slides are moving, just to confirm.
It's fine from my end, brother. I can see.
Okay, yeah. Okay then. Okay, so now what are the key changes from the previous standard? The standard combines the requirements of multiple earlier standards, including auditing SFI 1, ASFI 2, auditor's report, ASFI 3, terms of engagement, ASFI 5, about fraud and error at one place, while reducing redundancies. Then this standard has been defined, including aspects of its compliance. Opinion of auditor has been bifurcated. Now, what is the main difference between AAOIFI auditing standards, current ones, and this one versus international standards on auditing? The primary difference is that since we are talking about this whole aspect of Sharia principles and rules being involved, and obviously the unique business model thing. The main difference is that the objectives of audit include Sharia compliance consideration. Now, in the current standards, the Sharia compliance considerations are part of the opinion paragraph. In the same opinion paragraph, the countries that follow AAOIFI auditing standards, you will find the auditor's report for Islamic financial institutions, where the opinion paragraph include two opinions. One is on truth and fairness of the financial statements, which is like all the audits. And the second is on the Sharia compliance part. So this is part of one opinion in one paragraph. Now we have bifurcated it. We have bifurcated it into two opinions. One, as again, earlier we used the term primary and supplementary, but now we are saying that we have on the term there is something. The term that we use, there is something that we will be requesting your input as well. I can see a comment in the Q&A tab. Brother Sayyid Imtiaz Abbas. Assalamu alaikum, Brother Imtiaz Abbas. Thank you very much for being with us. Sister Zara, can you please list down standards on auditing, assurance, and exposure draft under pipeline issued by AAOIFI? Thank you, Brother Imtiaz. I think Sister Zahra or Sister Alia, somebody can put the standard. Okay, Marjan is actually responding. Yeah. So please, Sister Marjan, if you can respond to this one. I would suggest, Sister Marjan, if you can put it on the chat window so that all of the people can have access to that. So if you can provide chat window, you can provide the link to the auditing standards on our website, and you can provide link to both of these exposure drafts which are available. Thank you very much, Brother Imtiaz, for being with us. Okay. Then we have quality management requirements at firm level and management level have been inserted, which means that we have engagement level have been inserted, which means that we have aligned it with the international standards on auditing. Definitions and significant principles have been aligned with current established practices of auditing. The term established practices of auditing for us is primarily international standards on auditing, but it may include the local auditing standards in different countries. So we do not refer only to ISAs, but we refer to established practices of auditing, which include ISAs mainly, but which may include in different countries other like relevant country standards. This include coverage of certain aspects which were not covered in the predecessor standard, including aspects related to reporting, communication, related parties, compliance with laws and regulations, key audit matters, etc. Process flows and key principles of auditing related to various execution phases of an audit have been included, such as audit, sampling, test of control, and testing of detail. Marjan, if you can take a note of it. I think we had this discussion earlier that one of the significant changes is that audit report earlier was part of the appendix of the standard, and now we are working on issue of the audit report format as a guidance note separately. And the reason is that earlier there were some amendments in ISAs and we issued a guidance note. So there was apparently a consistency issue that there was a report format attached with the standard and there was a guidance note. So the decision now onwards is that audit report sample or the illustrative audit report will be part of the guidance note and not part of the standard. I think this is also one of the significant changes. Can see there is another question. Brother Atif Malik has a question. Assalamu alaikum and welcome, brother. If it is fulfill all condition requirement as mentioned in appendix of board's TORs attached. Brother Atif, can you further explain your question, please? I'm not 100% clear if on this one. So if you can further put your question in more detail. Then we have question from Brother Miftahu Dababa. Assalamu alaikum and welcome. Could you please provide an example like the one you used previously and explain thoroughly? It would be helpful if you could elaborate the concepts rather than simply reading the slides. Brother Miftahu, about which specific point you are talking about, because I believe that I explained already. And now I was just reading out that part to identify the key differences just as a reminder. So if you can kindly mention again more specific, if you can be more specific in your question, please. There is an anonymous attendee. Thanks for this, sir. My question is for beginner. Do you think the knowledge of commercial auditing and accounting is relevant in understanding Islamic finance reports and reporting? And can a beginner who cannot afford Islamic finance education is this time off for those ones mentioned? The quick answer is that in order to be an auditor, you need to be an auditor. There is one issue that at times the auditing education, like chartered accountancy, like CPA, that you learn in different countries around the globe, they are purely conventional minded, which means that your upbringing and your whole learning process is according to certain concepts, and you might need to unlearn some of the concepts. Like, for example, when I did my chartered accountancy, yes, I knew interest is impermissible, but all of my learning included time value of money concept. Now you need to start unlearning some of the things. You need to see, oh, if it has to remain Sharia compliant, there is zero interest. Interest is not allowed. So time value of money will not be there. So what will be there? How you will do transaction? Then we realize that Allah subhanahu wa ta'ala says, so it means that, okay, in exchange transactions, you can have time value. So this is some debate on which we have given in our framework and other places. But the point is that you need to be an auditor first. You need to be an accountant first. Then you need to have add-on learning. So for add-on learning, AAOIFI has its own programs like Certified Islamic Professional Accountant program, like Certified Sharia Auditor program, Certified Sharia Expert programs, and there are some certificates of proficiency. So these are the learning opportunities that AAOIFI provides, and there are a lot of other learning opportunities that are available in the market. But from our perspective, if you want to be an auditor of an Islamic financial institution, first you need to be an auditor. Yes, we look towards an ideal time when you can have an ideal Islamic economic system based on fairness and justice and all the principles of Islamic finance and economics. In that situation, maybe the complete education of auditing may be changed. It should change eventually. But at this point of time, the answer is you need to have a basic qualification on the accounting and auditing side before moving to this side. Basic qualification doesn't necessarily mean that you need to be chartered accountant, but at least if you want to do SEPA, if you want to be certified Sharia auditor program, it is better that at least at a graduation level or at a professional degree level, professional qualification level, you have understood this one. So again, this question was a bit out of topic, but I tried to answer this one. Brother Atif Malik says, sorry, my question was more about the rationale of bifurcation of the question. Apologies for a system glitch. So bifurcation of the opinion, I think you are talking, Brother Atif. When we go to that part, I think we'll be able to answer. Brother Dawood Ahmed has a question. How does SOA1 propose to make the audit report more meaningful for Sharia conscious shareholder? Should it include a separate expanded commentary or compliance? Yes, Brother Dawood, we have not a commentary, but opinion. Again, audit report is about 1 page. Now, obviously, it has extended to several pages. But the point is it needs to have a summary opinion. So there has to be an opinion on the Sharia compliance part, and that is what it is all about. So standard number 1, like our current standard number 1, talks about the Sharia compliance part. I can see one of my very dear friends here, Brother Nadeem Shahab. Assalamu alaikum and welcome, brother. Great to see you here. Why there is a need to prepare separate report instead of ISS 700 if we continue to compliance of ISS 700 and include report on other legal and regulatory requirements, which include Islamic finance as well? Brother Nadeem, this speaks of a professional. Excellent point, highly appreciated. Now, there are 2 situations, Brother Nadeem. One situation is we live in a system which is mainly for conventional. So the system is for conventional bonds. But now we want to do sukuk. What you will do? Within the legal framework, you will find some solutions. Okay, I try to find this solution. try to find this solution. Okay, I will use this law. I will use this law. I will write this in the contract. Okay, I will not register the land because the underlying asset, because it will result in dual taxation and things like that. Okay, I'm trying to work around. I'm not finding the optimal solution. Optimal solution would be that there should be a proper law for sukuk. That law should be allowing sukuk along with all of its requirements. That sukuk will be allowing creation of SPV that should be avoiding the dual taxation and other issues that we are having. That is the optimal solution. Now, what you said, brother, is the minimum. For example, Pakistan doesn't adopt AAOIFI auditing standards currently. We are in talks with our friends at ICAP and at SBP to consider adoption of AAOIFI standards. AAOIFI standards provide you the solution. It's not workaround. Now, ISO 700, so in case of Pakistan, for example, we take your example. Today, not only this, you have a requirement in the company law and the banking company law that business conducted, investment made, etc., were in accordance with the objects of the company. Am I right? This is requirement in Pakistan. This is requirement in several other countries. Now, objects of the company include Sharia compliance. So when you are auditing an Islamic bank, Brother Nadeem, do you actually ensure that the objects were complied? This is the side opinion. Yes, you do minimum testing on that. I know some of the auditors say, oh, we just need a Sharia board report on that. Brother, this is because we are trying to work around. Do you think that a bank like Mizan Bank having 1,000 plus branches and Faisal Bank having 800 plus branches, do you think you can rely completely on the Sharia board report? Actually, it's a chicken and egg situation. Sharia board says that we cannot audit 1,000 branches. We are relying on the auditors and internal auditors. And auditors say we are relying on the Sharia board report. So it creates a circular reference. But nobody actually performs that task. Yes, now we know Pakistan and certain other countries are bringing the external Sharia audit as a preferred requirement. If we consider external Sharia audit as a preferred requirement, not a mandatory requirement. But brother, do you think that something that goes to other matters is equally important like something as a primary opinion? That is the issue where we are stuck. And that is the reason that as AAOIFI, my dear brother, we try to provide the solution. We change the framework. We say that our framework works with the ISA framework, but it, to the extent of what is written in AAOIFI framework, it supersedes the ISA framework. Now, what we say that if we are talking about Islamic financial institutions and transactions that are primarily done with Islamic finance, and we are talking about institutions that follow Sharia, we need to have Sharia compliance and equal prominence. So we give it as a part of the main opinion paragraph, so that the auditor also feels his responsibility that he cannot just rely on the Sharia board report. Yes, we can always have this argument that what should be the level of depth that is needed. Some of the details are provided in these two standards. But thank you very much, Brother Nadeem, for raising a very good question. Thank you very much for being here with us. Highly appreciated. This part of laws and regulation, this part of this one is still relevant, but you know that it doesn't impact the opinion if the financial matters are not material. But in case of Sharia compliance, some of the things become material as well. So like, let me give you an example. You found some minor Sharia non-compliances. What will happen? Will it impact your regulatory matter opinion? Generally not. But what will happen under AAOIFI framework? Because you have to make an opinion on the Sharia side, you will expand your scope. You will expand your testing size. You will try to find a conclusion on that part, whether that is a Sharia non-compliance or not. And there can be some situations where the effect is immaterial, but the financial effect is immaterial, but the Sharia compliance is there. So for example, there is an issue with the distribution of profit and losses. This has Sharia issue and it has stakeholder issue. Now, the bank throughout the year, there were 12 workings of profit and loss computation. They did a lot of mistakes. They did a lot of incorrect calculations. They did a lot of in misappropriation, not in the meaning of fraud, means that appropriation of profit was not proper to different parties. Now, from the perspective of audit under AAOIFI framework, you cannot ignore it if you can say, oh, the total effect is immaterial. Yes, it may be correct that your total effect is immaterial, but it might have impacted the individual stakeholders during the whole year. Who is going to check that? Now, the problem is we are talking about maybe 1 million depositors. Impact to each of the depositors would not be material for the bank of a size of 800 branches, but it will be material for each individual stakeholder. It will be material personally for each of the depositors. Now, giving the due relevance makes it different. So if you put it part of the main opinion, then the auditor has the responsibility to go for it, because then we talk about the qualitative materiality aspects. So it may not be quantitatively material at the financial statements and income statement of the bank, but it will still be material for the individual profit distributions to individual parties. Putting it only in laws and regulation will undermine the significance of those depths of audit that are needed. And that is what we are trying to do as AAOIFI. Again, thank you very much. You raised a very important point. It is like, something that I think that was necessary to be explained. So your question gave me an opportunity to do that. Thank you again. Brother Dawood Ahmed has a point. Could a side-by-side mapping of ISAs and SOAs be developed to assess firms performing audits under both standards? Brother Dawood, thank you very much. We will consider doing it as soon as the standard is finalized. We'll try to do something, but I can assure that the primary differences are the same that we are emphasizing on right now. For all other details, actually, we refer to ISAs. So ISAs are applied in addition to the requirements of what we have. So we'll be having mainly 2 standards and a couple of guidance notes. There will be 1 guidance notes on report format, and there will be one or more guidance notes on audit of Islamic finance instruments. Like under IFRS, under ISAs, you have guidance note on audit of derivatives, audit of financial instruments. So similar type of guidance is expected to be provided by AAOIFI with regard to audit of Islamic finance instruments, etc., or the specific aspects. So some guidance notes will be coming on that side. 1 guidance note will be coming on the report side. Other than that, we will be keeping probably only these 2 standards and 1 external Sharia audit standard. We are not planning other standards to be brought in. Thank you very much, Brother Dawood. It will be done in due course, inshallah. Majan, if you can kindly take a note of this point, because this will be still important that we publish it in one or other form. Brother Muhammad Umar Quddus Attari, I think, Assalamu alaikum. My humble request to motivate Islamic banks like Mizan Bank in Pakistan to sponsor training and certification offered by AAOIFI, as currently is not on their agenda. I can provide evidence of their MOUs. Recently, there was a good news that as a Mizan Bank and ICAP actually signed an MOU to establish a center. I think that is a great initiative. We hope and we look forward towards more support from Mizan Bank. Your comment, sisters, if we can note it down, and we can request. Mizan Bank is one of the important members of AAOIFI from Pakistan. Our Mizan Bank CEO is on our board of trustees. Is now actually chairman of AAOIFI's audit committee as well. So we have good connection. Mizan has been supporting our initiatives, including last public hearing on the Sukuk Sharia Standard 62 in Karachi was also hosted by Mizan Bank. So we are very thankful to Mizan Bank for their support. But with regard to the qualifications part, we need to talk to them. Thank you very much. We'll surely take a note of it, and we'll talk to Mizan Bank management, inshallah. And not only Mizan Bank, again, all the banks, because this is something that need to be done. But I can mention that in Pakistan, several universities and NIBAF are already working with us on different programs, and including IOBM, IBA, and Minhaj University Lahore. At least these are 3 who are actually working actively on our programs. Brother Nadeem Shahab again, what if we say that financial statements are present fairly in accordance with Islamic and Sharia standard? That would perhaps be our objective. Brother Nadeem, I think you are close to what we are saying. We'll just come to the exact wording as we come to the standard, inshallah. More or less what you are saying is correct, but the way we have written is slightly different. Dr. Muhammad Umar Quddus again, I think, okay, this one was noted. I think his point came again. There is a question that CSA course is a very fantastic one that equipped staff globally. However, there is a way if we could get the certificate holders to learn more auditing in respect of Sharia audit. This is comment from anonymous attendee. Thank you very much. Actually, we have revamped the CSAA program. The new CSAA new program is divided in two programs: Certified Sharia Auditor Program and Certified Sharia Expert Program. Actually, the new program includes a full auditing course, which was not the case in CSAA. And that is one of the reasons that we believe that in order to be a Sharia auditor, you need to understand auditing better. So if you are a chartered accountant and ACC, etc., you can get exemption from that course. But if you are coming from graduation or other disciplines, in that situation, you have to pass that auditing course. So that is now part of, as a module, it is part of the new course. The new course is much expanded. Earlier, CSAA was only single module program, but now these are 4 module programs. Obviously, today we are not having enough time and liberty to discuss more on that part. So I'll just move to the next question. Brother Muhammad Ahmed, Assalamu alaikum. How some companies are operating in conventional and they have one Islamic window as well. After the application of these standards, whether there should be 2 separate audit reports or 1 report under ISO 700 with UOM and OM, and how it will work. Brother Muhammad Ahmed, excellent question. So first it comes to not to audit report, first it comes to the financial statements, because audit report is on financial statements. So if you have conventional financial statements, you cannot have AOFI report on the conventional financial statements. That is understood. Now coming to window, AOFI standard, Sharia accounting standard number 40, FAS 40 on Islamic windows requires, and that is something I would request our brothers at SBP to take note of, that requirement is that there should be a complete set of financial statements of the Islamic window. Now, Pakistan, mashallah, is moving towards a transition, inshallah, and we hope that happens. But the point is that what we have as Islamic window, that needs to prepare a separate set. And this is our preference, that that set should be subject to audit as per AOFI auditing standards. And then you club it with the conventional, which will be subject to audit under the ISO 700 or the whole set of ISAs. I think it is clear, Brother Muhammad Ahmed, but if it's still further clarification is needed, please let me know. Brother Fahad Akbar Khan has mentioned, does SOAA1 cover both internal and external Sharia audit? No, brother. This is not on Sharia audit. SOAA1 is on the financial audit and talks about that even in the financial audit, because of the information needs of the stakeholders, you need to consider Sharia compliance and the business model, which means that for internal and external Sharia audit, we have different standards. So for internal Sharia audit, we have a standard number 11, which is on internal Sharia governance standard number 11 on internal Sharia audit. Internal Sharia audit is not part of our auditing standard, it's part of governance standards, because that is a part of the internal organization functions. It is a organ of governance. So that is covered in governance standards. External Sharia audit, which is not a mandatory requirement for as per AOFI currently, it is a preferred requirement, but we want it to become applicable in future. That is in SOAA 6. Earlier we were calling it AS6. That is already issued several years back. That is available on our website. There is a huge project of providing guidelines on that actually we started with support from ICAP as well at that time. The initial work was included some of the ICAP support at that time as well, but the project delayed because of certain quality assurance delays. Other than that, the project about the standard was finalized at that time, maybe 6 years back, 5 or 6 years back. So the standard is already in place. That is standard number 6. Brother Dr. Muhammad Umar Khuddus has a point about email, contacting further details. For sure, anybody who want to contact me, they can contact me at oansari@aofi.com. Sisters, if you can provide my email address in the chat window as well. For anybody who want to provide comments, we'll expect any comments related to the standard, as well as for the standards, you need to provide comments at governance@aofi.com. Brother Daud has another point. Will AOIFI issue sector-specific implementation notes for Waqf institution, Takaful, Islamic microfinance to illustrate how business model, different audit effects, audit planning and execution? Highly appreciated your comment, Brother Daud. We will take it into a note of it. Sister Marjan, if you can take a note of it, this is a good suggestion. Yes, we wanted to issue guidance notes on products, but yes, when we do it on products, you might need to issue something on the type of institution as well. So highly appreciated your comment. I believe that in due course, we should put it in our plan. We will take it to the respective boards and take their approval. Again, these things may take some time, but surely your suggestion is taken very positively. Inshallah, we'll be taking it. Brother Muhammad Ahmed, yeah, but what if the company is not willing or not presenting the separate set of financial statements as under Islamic? Again, if they don't do the first part, how I can do my second part? Means that financial statements are the first and auditing is as the second. If you don't have the financial statements, you cannot do that auditing. And this is something, as I requested SPP that they should take note of it and consider that this is a very important requirement. Brother Muhammad Yusuf Warsi, application date of these standards in Pakistan. The application date of the standard is not yet final, and adoption in Pakistan is under consideration, not yet done. This is something that obviously we are in talks with SECP as well as SBP. Obviously, both the institutions are positive about this, but at the same time, we know that there are some hurdles on that, which include current adoption of IFRS and ISAs by Pakistan already, which is creating a hurdle on this one. So this is this decision that Pakistan authorities have to take in due course. Thank you very much. Brother Abdurrahman Al-Sheikh, Assalamu alaikum. It will be great to add the standard, the process of auditing financial statement and the checklist used. Brother Abdurrahman, the checklist used, etc., I think that should be part of the implementation guidance. Thank you very much. We'll take note of it. We'll try to do that part, inshallah. So we'll just take note of it and we'll try to do it, inshallah. We have comment from Brother Maulid Abdurrahman Ali. My name is from Somalia. I was graduated accounting department. Current job is senior lecturer at a higher university in Somalia and also working business consultant. So I'm highly passionate to learn certificate of professional at your institution. Thank you, Brother Molid. You can just drop an email to me at oansari@aoifi.com and then we'll take it forward. So, next comment is from Brother Ashraf Kaya Bains. What about implementation of the standard in Uganda? Brother Ashraf, there are two stages for AOIFI's work. The first stage we call standards development. The second we call standards implementation. For the standard implementation, we are working with different regulators around the globe. So at this point of time, auditing standards are not adopted by Uganda. I think there was some point of using as guideline of the financial accounting side, but this is something that we need to work with the regulators. It will take some time, but inshallah, we are hopeful about it because a large number of African countries have now started adopting AOIFI standards fully or as guidelines. Brother Rahil Bhagar, my dear friend, is here. Assalamu alaikum and welcome, dear brother. I have a question regarding the preparation of separate Islamic financial statement. Are you suggesting that Islamic banking should follow a subsidiary style accounting approach where separate financial statements are prepared and subsequently merged into bank's overall financial statement? The answer is yes, Brother Rahil. We suggest that in the governance side and on the accounting side, we believe that Islamic finance window should work as an institution within an institution model, which means that to a maximum extent, the functions, reporting, everything for the Islamic finance window should be segregated and should be available for public. Thank you very much, brother. There is a question from anonymous attendee. Thank you. Can a Mudarib take money from the Rabul Mal and transfer it without investing it himself and then finance it with the Murabha? Let's state how. Brother or sister, I don't know because it's anonymous attendee. The question is slightly going out of the topic for today. So my apologies, I'll not be able to address it right now because today we have limited time and we have to now rush to the main topic. So my apologies. This question will take a little bit time and it's out of context for today. We have a comment from Brother Najibullah Omari. First of all, I would like to extend my sincere thanks and real pleasure, brother, and it's thanks to you for being here. as a bank currently undergoing transformation into fully Islamic bank, I would like to ask, in your opinion, should the Sharia audit unit be independent and separate from internal audit, or shall it be managed within internal audit? AOIFI governance system framework, as well as AOIFI standard number 11 on internal Sharia audit, they both allow that in case of need, the unit can be single. Otherwise, preferred is that there should be a separate Sharia audit unit. Again, I will not go in that detail, dear brother, because of the limit that we have at this point of time of regarding the time availability. Again, brother Dawood Ahmad, what safeguard exists to prevent overlap or confusion between the scope of an auditor's Sharia related procedures and the role of Sharia supervisory board? Brother Dawood, I think it's an excellent question. While we were going to have this question later, but let me try to explain. Brother Dawood, in the auditing or for any type of assurance, there are two elements. One is the design part and one is the implementation part. Am I right? For all controls, for all the issues. So for example, you ask me, Umar, do you know about this sukuk? Is it Sharia compliant? I can tell you, Brother Dawood, I reviewed its contracts and structure and process flow. And based on the documents and process flow and structure, I can say it's Sharia compliant. This is the design part of the transaction. Now, the question, for example, it is a mudarba sukuk. So for the during the 5-year period, when the sukuk is in continuation, there has to be an underlying pool of assets. There has to be a genuine profit coming out of it. That genuine profit need to be distributed according to the Sharia principles and rules and the contractual obligations and the contractual agreement with regard to the percentages, etc. of profit. If there are reserves or other things in line with Sharia, these are to be kept properly. Tangibility requirement need to be met for the sukuk to be keep it tradable. This is the continuity part. This is the implementation part. So the question is, if the Sharia board has given a fatwa that this product is halal, who is going to ensure that, yes, it is implemented in the same way so that it remains halal? So we say that Sharia board's main responsibility, because Sharia board also need to say that in our opinion, because in the new governance standard of AOIFI, we have a standard on Sharia supervisory board, recently issued standard. It's a very good report. I would suggest all of you to read that report in the appendix to our report. I think even Pakistan, I think in the new governance framework, they're adopting similar to that. So that report says that Sharia board has to say, in our opinion, it was all Sharia compliant. Auditor also say, in our opinion, it was all Sharia compliant. External Sharia auditor also say we have all Sharia compliant. Internal Sharia auditor in the internal opinion has to say that it is all Sharia compliant. So now the point is that the design part is primarily with the Sharia board. Design part is primarily with the Sharia board. But even Sharia board may not have design part to some extent. For example, the countries that adopt AOIFI Sharia standards. So we have a hierarchy of Sharia principles and rules. So we say that Sharia principles and rules include AOIFI Sharia standards, country Sharia regulations, central Sharia board's rulings, financial accounting standards, requirements related to Sharia, and Sharia board's opinions. 5 items: Sharia standards, country Sharia regulations, central Sharia board rulings, financial requirements as per Sharia, as per AOIFI phases, and last, as per Sharia board. So this is the design part of the transaction. So even now, as per AOIFI, the Sharia board has limits. So even in Pakistan, as the majority of the AOIFI Sharia standards are already adopted by SBP, and even SECP adopted some of them and put all of others as guidelines. So effectively, the design part for the Sharia board is also getting limited and limited. Now, design part with Sharia board, but who can check the implementation? Can Sharia board go and check implementation in 1,000 branches of Mizan Bank or 800 branches of Faisal Bank? Not possible. Even bank with 100 branches, it's not easy. What happens for that? You need to have an internal Sharia audit mechanism. You need to have a Sharia compliance system in place. You need to have internal Sharia compliance, Sharia audit. You need to have external Sharia audit as preferred requirement. In Pakistan, it is mainly required by SBP. And you need to have the auditor, when he audits the financial statement, also consider the implementation of Sharia principles and rules in all aspects as per the scope assigned. This is how we are trying to align it, because no one single party can assure all of it. But like, for example, in case of audits, you have internal audit, you have external audit, you have compliance function, you have so many functions within a bank or an institution on the conventional side. On the Islamic side, you add these aspects to ensure that Sharia compliance is there and the unique business model is appropriately served. Thank you very much, Brother Dawood, for raising some very good questions. Brother Hamzi Faizali, Assalamu alaikum, brother, and welcome. Referring to para 64, if the auditor is unable to determine whether a non-compliance of Sharia principles and rules have occurred, Brother Hamzi, excellent point I think you have raised. Country Sharia so in a nutshell, if the auditor is unable to determine whether a non-compliance of Sharia principles and rules has occurred because of limitations imposed by the circumstances rather than by the management or those charged with governance, the auditor shall evaluate the effect on the auditor's opinion in line with the AAOIFI auditing framework, including the relevant requirements of established practice of auditing. Can the auditor refer to the country's centralized Sharia board, if any, or other relevant regulator may suggest it to be included? Brother Hamzi, the point is, the dispute resolution mechanism or the resolution mechanism has to be part of the governance framework of different countries. So if we have put one thing, the example that I mentioned, of the hierarchy, the hierarchy that I mentioned, it included five items. But in some of the AAOIFI standards, it includes an explanation, at which we have decided that it will be included in these SOAs as well. In SOA 1, I think it was not included, but the decision was that it will be included. That explanation says that in case of any interpretation issues with regard to the above five, the interpretation right is with the Sharia board, not with the auditor. So auditor will not be writing to the central Sharia board, it will be writing to the Sharia board of the institution. Now, who is given the authority to define Sharia for the institution is the Sharia board of the institution, not the auditor. Auditor has to check the implementation. Auditor is not there to check the design part primarily, unless there is a blatant non-compliance of Sharia standards. So Sharia standards says something and its bank is doing something else. Obviously, this is a blatant non-compliance and auditor need to report it. But if there is an interpretation issue, so like for example, AAOIFI Sharia standard says that in case of Murabaha, you can not give agency to the customer unless is it necessity. Now, in Pakistan, you give this agency to the customer every time. Why do you give it? For two reasons. Number one, avoidance of double taxation. Otherwise, there will be double tax and double withholding tax. Second reason, and even the sales tax issues. Second reason, there is a risk factor that what happens if the supplier runs away. So what you do that you transfer the money to the customer as agent, then you make the pay order out of that payment to the supplier. Now, this is a necessity determined by the respective Sharia boards in Pakistan, considering the local tax and legal issues. So it is considered a necessity. Now, I go as an auditor and I say, okay, I believe AAOIFI Sharia standard says it can be done only in necessity. In my belief, there is no necessity. Here we have a point that since that explanation is provided in the definition, which says that interpretation here will be in the hand of the Sharia board. So let Sharia board decide, because Sharia board is appointed by the institution to handle the Sharia related design part, Sharia related fatwa part. So that fatwa will be coming from the Sharia board. Auditor will not become mufti. Auditor will not be challenging the judgments. Auditor will be checking the compliance. But yes, there can be blatant non-compliances. Obviously, if there is a blatant non-compliance, that for sure will be addressed by them. Now, the next question is from Brother Rahil again. I think it is Brother Rahil has said that SBP and ICAP need to follow up on the topic for sure, Brother. Yeah, Rahil, I agree with that. And then there is a question from Suzanne Safwat. Assalamu alaikum and welcome. I would like to inquire about Sharia Standard 21, especially clause 342. The standard requires that total amount of interest-bearing deposits should not exceed 30% of the market capitalization of the total equity. Would it be permissible to calculate this threshold based on 30% of total assets instead of the market capitalization of total equity? Many Islamic institutions prefer to use total assets as a more accurate reflection of a company's true value, especially since I think market capitalization. I think your question was cut here. Okay, first thing, we are here for a public hearing on the auditing standard. Thank you very much for reaching out. Maybe you can drop this message separately. We can have separate chat on this one. If you can just drop to me on my email address, oansari@aoifi.com. I will not like to go in this discussion right now, but as in a nutshell, Sharia standard on screening is under consideration. AOFI is considering, the Sharia board is considering to revise and improve the screening criteria. So even if otherwise this point will be taken to the Sharia board, so if you can just send me in writing, I would not be in a position to answer this right now because of time limitation, and also because we are generally not expected to comment on the different treatments with regard to Sharia if they are not in compliance with the AOFI Sharia standard. Second question from Susan Safwat. I have other suggestion that we need a standardized business model for the Islamic financial statement for all sector, industry, banks, and the Takaful insurance to be according to Islamic standards. I think you're talking about illustrative financial statements. So for the banks, we have already issued, and for Takaful, we are in advanced stage of issuing the illustrative financial statements. If you are talking about that, if it is about something different, then my apologies that I cannot understand your question clearly. But I feel that you were talking about the illustrative financial statement. We have comment from Brother Abdullah Zubair. Assalamu alaikum and welcome, brother. Is there any plan to issue specific audit guidelines for each Sharia contract, such as detailed checklist for what exactly need to be audited in Murabaha or Mudarba or other contracts? Answer is yes. Yes, we are planning that thing. We are planning that thing as a part of the external Sharia audit programs, and we are planning to be part of a specific guidance note on the auditing side as well. Thank you very much, Brother Abdullah. Inshallah, in due course, you know, AOFI is working with very limited capacity, very limited resources, but inshallah, we'll try to do that. We have comment from Brother Abdurrahman Al Sheikh. When do you expect you will start the audit implementation standard for IFIs? The implementation guidelines, if you are talking about, Brother Abdurrahman, and as soon as we finalize the standard, we'll continue working on that part, inshallah. Brother Hamzi, you are welcome. And Brother Muhammad Imran. Interpretation issue should be resolved by very clearly limit of scope of the Sharia auditors. Resolved to very clearly limit the scope of Sharia auditors. Exactly, Brother Imran. Thank you very much for being with us. It's a pleasure to have you here. And yes, we agree. We based on that explanation that is already there in some of the AOFI standard, including SFI 6, audit standard number 6, no, new SOAA 6, and the rating standard. That explanation is there. Now our decision is that in all the definitions, wherever we provide the hierarchy, we will be providing that. This is the definition of Sharia principles and rules. So definition is defined as per hierarchy, and that explanation provides interpretation how to actually implement it. Thank you very much again. Brother Muhammad Furqanuddin, there should be a mechanism of collecting all fatwa issued by different Sharia board and their review by some centralized Sharia board. AOFI is actually, you cannot combine all of them, but what we are doing as AOFI's Sharia standards is actually, when we do it, we consider fatwas issued by different Sharia boards around the globe, and then we try to find solution, the best solution, common solution, consensus solution as per Sharia. How we manage AOIFI issue sector-specific implementation with the IFRS with their standard. This comment by Hayatu Meniji. Thank you very much for being with us. Again, let's be honest. We believe as AOIFI that IFRS are very good quality, top quality standards. But IFRS are developed in the conventional paradigm, and at times they do not serve the purpose of providing a true and faithful representation of the financial statements of unique business models of Islamic finance. And at times they do not consider, not at times, but always do not consider some of the very specific Sharia requirements of AOIFI, Sharia requirements. Now, since that is not the subject today, I would just suggest that you can read two of the documents. One is the AOIFI framework accounting framework, financial reporting framework, particularly chapter 7 of the framework. It is available on the website. The chapter 7 actually identifies how Sharia rules are converted into accounting rules which are applied in AOIFI standard. That's part one. Secondly, there is a book that we have published, IFRS and Sharia-based reporting, a conceptual study that provides you significant guidance on that part. We are working on further analysis on comparison with the IFRS. Probably a report and more later a detailed book will be published shortly. Again, we have comments from Brother Dawood Ahmad. May I suggest following suggested wording for the objective of the standard? The objective of the standard is to establish a structured and principle-based framework for auditors, clearer than that's just comprehensive framework in conducting audits of financial statement of institutions that operate in accordance with Sharia principles and rules. It aims to guide auditors in evaluating both the reliability and reporting of financial reporting and distribution adherence to Sharia, thereby supporting the accountability of such institutions to Sharia-conscious stakeholders and wider public. Add dual objectives plus shareholder focus. Brother Dawood, thank you very much for a very valuable comment. Now, while I cannot agree that it will be inserted, because again, we have a mechanism. It will be taken to the Professional Auditing Standards Committee, and then comments will be invited from the Accounting Board as well, and then Governance Board will finalize. So we'll take it through the whole process. But I think your comments have merit. So for sure, these will be taken, and we'll see how the board and the respective committee work on that. Brother Hamzi, again, Brother Hamzi Faisali, again, I'm sorry, Brother Umar, I would like to seek clarification. This standard is applicable to internal Sharia audit or external Sharia audit? No, it is applicable neither on both. It is applicable on financial auditor who performs the financial audit of the institution. We are saying that when you perform the audit of the financial statements of the institution, you cannot ignore the Sharia compliance part. You need to provide an opinion on the Sharia compliance part as well. So that is what we have here. Then we have again a question from my dear brother Nadeem Shahab. Would these financial statements be in addition to IFRS, Islamic and Sharia compliant financial statement would not be accepted at international level, for example, group consolidation, unless and until the Islamic and Sharia accounting framework is approved by IFAC? Brother Nadeem, I think this is a misunderstanding. This is a misunderstanding. Fundamentally, there are nearly 19 regulatory jurisdictions in 13 countries, and in total there are nearly 50 regulators, 47 regulators in 35 countries that follow AOIFI standards in one or another form. We have the standards like, you know, in global consolidated financial statements prepared under AOIFI framework. So this is, I'm sorry to say, Brother Nadeem, this is a misunderstanding that it will not be accepted if it is not accepted by IFAC. I think this is not a correct understanding. I would like to mention that at times people refer to IMF and other. I can mention that IMF's papers that are there, they actually refer to AOIFI's standards, and actually IMF currently is represented in our Public Interest Monitoring Committee as observer member. We have worked with IMF, we have worked with United Nations Strategic Division, we have worked with IFRS Foundation and ISB, we have worked with World Bank. All of these institutions fully understand that there are specific financial needs of financial reporting for Islamic finance, and they acknowledge and appreciate the work of AOIFI. So I think, again, this is not enough time. So the question is, what is the right way to go? For us, we believe that the right way to go is to adopt the proper set of financial statements that is applicable for the unique business model and information needs of the stakeholders. Brother Yusuf Sayed, when do we expect these standards to be effective, and what is our expectation that regulators will expect these standards will instruct auditors to apply SOAs? Brother Yusuf, in the countries where AAOIFI auditing standards are applied already, that number is less than the accounting standards adopting countries. But the countries that adopt, they will obviously, with the effective date, they will become applicable. For sure, effective date is something on which we are requesting you to provide your comment. Normally, our policy is that we provide 1 year time from the effective date. So if we issue them within 25, we will be putting a requirement for 27, most probably year 2027. So it means that audit of financial statement will be applicable on the beginning of 28, that is financial statements of 27, beginning of 28. This is probably going to happen, but again, I'm not sure. I cannot comment on this right now. This is what is one of the purpose of the public hearing, to take input from the stakeholders, to what extent they feel it would be difficult to apply. Fundamentally, the auditing concepts are not being changed from what that are there. It means that the Sharia opinion is already required. So that is there. Yes, it is improvement in multiple aspects, including alignment with IFRS, with the ICs, etc. That is correct. I can see there are a lot of things going on in the chat window as well, but to be honest, I will not be able to take comments in the chat window, but we'll now take you through the contents of the standard. So objectives. Now what we will do, that I'm not going to read it out all, but we will be requesting the comments on each of the sections. The objective, as I mentioned, the main objective is that it is about the financial statements in line with Sharia principles and rules. The scope include all Islamic financial institutions and other institutions that reports in line with and complies with Sharia principles and rules. These may include some of the virtual entities. When we talk about here virtual entities, it includes Islamic finance windows, and it includes sukuk virtual entities, etc. And institutions involving Islamic finance structures and transactions, they are all to be considered. Then audit is of the following is not considered here. These are some exclusions that something that does not apply, follow the relevant principles will not be subject to that. Like for example, in case of Windows, we have a requirement that you need to prepare separate sets. So if you are not following it proper, then you cannot apply this one on the conventional standard. There is a comment again from Brother Muhammad Adisa. Brother Umar, I quite agree with your submission that Islamic banking and commercial banking are absolutely different from each other. Also, IFRS standard and AAOIFI financial standard cannot be same because IFRS was not mindful of Sharia principles when it was being formulated. Jazakallah khairan for your wonderful presentation, Brother Muhammad Adisa. This is like, the support, your kind words are highly appreciated. This is the support that is needed from the professionals, highly appreciated. And again, we can always have long discussions with our brothers to discuss on the technical aspects. But I would like to say one thing. When we work at AAOIFI, for us, Sharia is paramount. So we appreciate the work done by global standard setters. But we take it with a pinch of salt. We take it with a paradigm. We see that whether it fits in our paradigm of Sharia or not. If it fits in paradigm of Sharia, we say, thank you very much. We are going to adopt this standard. If it doesn't fit in paradigm of Sharia, or if it doesn't fit the business model of the institutions established under Sharia principles and rules, we say it is something where we need to do our part as AAOIFI. We need to develop our standard. Thank you very much, brother. Highly appreciated. I can see a couple of hands raised. Although whenever time permits, we try to allow people to speak up as well. But honestly, today, I think it won't be possible because of the limited time. We have, it is more than half the time we have already spent, and we are on the objective and scope clause. So my apologies that we won't be able to take those comments. Sister Zahra, I think we are supposed to take a break as well. At what time we are planning to take the break? I think a prayer time in Bahrain will start shortly. I think it will start. Actually, it just started now, 11:39. It just started now. So I don't know, sister, what time we have planned to take the break.
We are planning to take the break at 12, brother.
Okay. So we continue for 20 more minutes, then we take a break, and then we'll continue till 1. I think the public hearing will continue till 1. Now,
Yes.
I have to be quick because there were a lot of questions, and maybe I took some time in explaining that as well. So then we go to the framework of auditing. So we define that AOIFI framework of auditing includes all the SOAs, SOAAs that we issue, along with the established practices of auditing. So these two standards with all the ISAs, unless there is an inconsistency in between. If there is inconsistency, the AOIFI's SOAAs will override, will supersede. Like, for example, defining the objective of audit, defining the report format, and reporting requirements, etc. That one ISAs will not override. That one AOIFI SOAs will override. Other than that, whatever is neutral, whatever is good quality from ISAs, which is fully acceptable, that will be fully applied. So the overall AOIFI auditing framework is comprising of SOAAs as well as the established practices of auditing, mainly comprising of ISAs. Now, again, definitions of the applicable framework, we believe that the primary framework should be AOIFI, but again, it can be another similar framework that can be followed. We have our own hierarchy that is there. Definition of auditor, audit documentation, audit evidence, audit risk, audit sampling. These are the definitions that are similar to ISA definition, except for audit risk, where we have the Sharia rules and principle issue also as part of the audit risk. Then there are direct external Sharia audit and emphasis of matter paragraph. These are the definitions which are simple. I'll not be stopping here. Established practice of auditing, as I explained, comprise of the ISAs and or equivalent standards and regulatory requirements in the respective jurisdiction. Then again, these are some of the definitions that we have. I will not be going into detail for this one. So let me skip that part. But if we have any question, just one comment. IFI definition as per AOIFI includes window, which means that as a question that was raised earlier as well, FAS 40 also talks about this thing, and even the definition of IFIs, which is there in all the AOIFI standards, if window is considered to be an institution, which means that it's a virtual entity, it's a virtual institution, and it works as an institution with an institution model under AOIFI. Other definitions are like, some from ISAs, but those are slightly amended to incorporate the objective changes that we have. Other than that, all these things are similar. Public interest entity definition, we have a specific definition on that part. Other than that, Sharia principles and rules, we already talked about this one. As I mentioned, explanation is mandatory here. So then I will move to the, okay. Just a question, Marjan, if you can just clarify the supplementary opinion. What is the new terminology that we are using for the supplementary opinion? For the primary opinion was on the financial statements, and in the final version, in the SOA 4 final version, what is the new terminology?
Brother, I'm not 100% sure. I think it's opinion on compliance, but
Yeah.
let me just get back.
No, just check. Opinion on truth and fairness and opinion on compliance, I think. Now we have the aim of audit and the objective of the auditor. Objective of the auditor is similar to ISIS, but it is like, slightly improved. And then we have the aim of the audit. So aim of the audit and objective of the auditor for the purpose of audit, these are defined here. Again, we are open to take comments. You are all requested to provide your comments in writing as well, because maybe today it will not be enough time to consider all the comments and review all the things. Brother Daud has raised 4 or 5 very good points. Please consider the following key gaps in definition. Sharia non-compliance risk is not defined. Sharia Supervisory Board and the role and authority is not explained. Brother, Sharia Supervisory Board, we have a new definition as per the governance framework that will be used. We have to be consistent. So that one will be used. But with regard to Sharia non-compliance risk, also we have a new definition. We can add that. Thank you very much. Materiality on the Sharia context. No mention of how to judge if a Sharia issue is big enough to matter for stakeholders. Brother, I think we have discussed some of the points here, but Brother Daud, if you can make it more specific, because we did not say big enough. We said qualitative materiality. Qualitative materiality will always remain judgmental. You cannot put it in terms of quantitative materiality, like in terms of numbers. Then you talked about Sharia audit, financial audit and Sharia audit difference. Okay, we'll consider that. Sharia governance framework. I think the Sharia governance framework definition, I think we can bring in from the new governance standards. And I think definition is there. Now, for your point number 6, AAOIFI, where standard doesn't define what qualifies as entity as AAOIFI, I think that is defined, brother. That is defined. We just have gone through it from the definition. So I think your 3 points are very important. Sharia non-compliance risk need to be defined. That is correct. Sharia Supervisory Board, the definition, the new definition from governance framework we will take. It improves on the current definition. So thank you very much. It will be taken. Materiality, we'll see how we can improve, and I think something is included in SOA 4 as well. So we'll see how we can improve that part. We take your point very seriously, highly appreciated your comments. Difference between Sharia audit and financial audit. The point is, my dear brother, no standard defines differences. What we can consider defining it in the basis of conclusion. So Marjan, if you can take a note of it, that if we can define a differences between the Sharia audit, financial audit, and Sharia audit in the basis of conclusion or some appendix, that we can try, but we cannot put it in the body text of the standard. For the governance framework, we will provide definition, and AAOIFI is well defined already. Thank you very much, Brother Daud. You have raised some very good points, and these are going to be value addition for the board, inshallah. Thank you again.
Yes, I've noted the points. Also, it's truth and fairness opinion and Sharia compliance opinion.
Exactly. That was I was saying. So initially in the SOA 1, we referred to it as primary opinion and supplementary opinion, but then after board's reconsideration of the initial public hearing comments and certain other comments in the final exposure draft version of the SOA 4 that we issued, we used the 2 terms, truth and fairness opinion and Sharia compliance opinion, rather than primary opinion and secondary opinion or supplementary opinion, because the board did not want one to be considered overriding others as primary. The board considered that both are equally important, so they wanted to have a different nomenclature for them. So that is changed. Scope of audit. This section talks about scope of audits quickly, and then we have the compliance with the AAOIFI framework for auditing that will be considered only if you comply with all the requirements. Then we have ethical requirements. AAOIFI has its own code of ethics. So we say that our code of ethics, along with the ISBA code of ethics, both will be applicable. Quality management. So we have this section on the quality management. This is aligned with ISA. So some of the sections here are aligned with the ISA. So we ensure that the minimum basic requirements are included in the standard number 1, and remaining details are available with the ISA. So ISAs can be referred for details. Again, we are open to take any comments on this one, but this is more or less a summary of what are the key requirements of the quality management on the ISA, ISQM 1, and it refers to ISQM 1 as well. Then we come to the process flow of the audit, conduct of audit, initiation, and pre-commencement. So we have gone through the whole process flow. In the process flow, we have put in the requirements. Again, as I mentioned, most of the requirements are aligned with the requirements of ISAs. Then we have requirements for within the initiation and pre-commencement. We have requirements for initiation and pre-commencement. Okay, I can see a comment here. There are a couple of comments. Brother Muhammad Ahmad can also edit standards are applicable to complete set of financial statements of Islamic standards. I think we may clarify it somewhere. Thank you very much, Brother Muhammad Ahmad. Thank you very much for being with us. Brother Muhammad Imran, there should be differences between financial audit and Sharia audit. This one should be from making Sharia audited report meet SSB actions. this difference could be from making Sharia auditor report needs Sharia board actions. No, I have doubt on that. Sharia, we cannot ask the auditor, we cannot allow the auditor that he imposes things on Sharia board. No, they have to give their observations. Rather, Sharia board has to take a judgment call on those observations with regard to the interpretation element as I referred to, which is part of the definition of the Sharia principles and rules. So we cannot say that Sharia auditor, and again, I would again emphasize, this is not Sharia audit. This is financial audit, and this is the audit element within the financial audit. So from that perspective, we would like to say that this Sharia audit, we cannot ask the Sharia board for that. This standard does not require. Again, brother, again, your comment is appreciated. We'll take the comment to the respective committee and board, and we'll see how they see this one. Just one thing to mention that I mention again and again, every single comment that you guys provide is valuable for us. We take it to the board. We take it to the respective committee. Only thing is, here we try to engage in a dialogue. So I try to explain some of the things about the views or something that is already explained in the standard or something that is against the overall approach of the standard. That's it. Other than that, my view, if I mention something, doesn't matter in that purpose. Obviously, the respective committee and the board will take the judgment call. Brother Muhammad Ahmed, again, can we also mention the guidance on audit and summary on single statement or single statement, single element, same as ISA 800 series? The guidance on the individual items will be there, but will we be taking approach of ISA 800 series? I'm not sure about it, but yes, guidance notes will be there. So just we are taking note of your comment, brother, and we'll see how much we can benefit from the ISA 800 series for that purpose. Thank you again, brother. So let's move on this one. So then on the acceptance and compliance continuous requirements, we have quality assurance requirements in line with the ISAs and in line with the best practices. Some of the importance about preconditions, here are a couple of things which are very important. So one of the point is very important. Before accepting an auditor shall determine whether the financial statement reporting framework under which financial statements, if not fully compliant with the OIFI, are prepared, is acceptable with regard to the Sharia principles and rules. Because if the financial reporting framework is not as per Sharia principles and rules, you cannot apply these standards. So you can follow, like for example, in Pakistan, you have local IFAS 1, 2, obviously 3 and 4 were also there. So but 1 and 2 are generally implemented. So the point is that any framework like this, which is Sharia compliant framework of financial reporting, that would be acceptable. So this is a precondition for acceptance of audit. And this is also like, about that obviously the responsibility part is there, but there is the element with regard to in the pre-commencement and initiation, there is the quality, one of the quality assurance part that we discussed earlier also. There was one very important point I would like to mention. I think this is part of in here and part in the SOA 4 as well, that you have the right expertise level. So this is the point. So an auditor shall ensure that it has adequate capability in terms of resources and knowledge of the Sharia principles and rules and the nature of operations and transactions of the institution in order to fulfill the responsibilities under the engagement in a professional manner. The quality management standards in line with established practice of auditing shall be followed. This shall entail active involvement of Sharia experts throughout the engagement, as well as the experts of the applicable financial reporting framework, including in particular the OIFI financial accounting standard. Such assessment of capability shall be documented properly. So you cannot perform audits unless you develop the capability. This is a general requirement, but are we actually applying it in case of Islamic financial institutions or audits? I have doubts on that based on my own experience and what I have seen. Again, we have a couple of comments coming up. So let me try to complete this section and take the comments. So quality assurance and the initiation and pre-commencement, we have discussed. General requirements are aligned with the IFRS, ISAs. But the main important point that I mentioned is about the quality management part and the capability part. That is one of the fundamental things. Then we have the planning and risk assessment section that summarizes the key requirements with regard to the planning and risk assessment. Again, mainly it is in line with the ISAs, except for the differences that some of the aspects are there where you need to consider the Sharia compliance part and the experts' involvement, for example, here, and the involvement of the effectiveness of the Sharia related functions, including SSB, internal Sharia audit function, etc., which is not there in the conventional institutions. Competence of the audit team, as I mentioned, it is required here as well, as it is part of the quality management, but it is part of the competence of the audit team that you need to assess as a part of planning and risk assessment. Then again, I can see three points. So there is one comment from anonymous attendee. Please kindly share the document under review. This is exactly the same as PDF version on our website. Normally, we don't share the PDF version, PPT version. PDF version is already shared. May I request Sister Marjan or Sister Alia to put the link to both the exposure drafts in the chat window, please, and provide to the colleague as well. Okay.
Yeah, it's done. It's there.
Okay. Okay. Then there is a comment from Brother Muhammad Imran. If AOIFI can provide guidance for risk levels, for example, Sharia legal violation, making transaction void, high risk Sharia violation without making transaction void, medium to low risk. Brother Imran, actually, it's not part of the standard. Standard provides the principles. How it is done, it is part of the implementation guidelines. So we take a note of your comment. It's a highly valuable comment, but we will just see to what extent we can go in the guidance note. But if you put all these things in the standard, it will become too prescriptive and it will become actually difficult to implement. And when you develop the global standards, you need to keep them reasonably flexible and principle based. That is one thing that we'll try to do. But for sure, as guidance note, your comment is highly valuable. We'll take it to the respective committee and we'll see how we can do. We have comment from Nuruddin Rahimia. Shall we mention that we are referring to external audit? Yes, we have talked about this thing, that it is about these two standards are actually about the external audit. So now let's move ahead in the planning and risk assessment part. We have identifying and assessing the risk of material misstatement and non-detection of compliance with Sharia principles and rules. Non-detection of non-detection of compliance with Sharia principles. I think, Sister Marjan, if you can just take a note of it, because you remember when we were discussing, we had some comment about improved wording here. I remember that we agreed on this wording, but we need to make it more simplified. It was discussed in the internal meeting. Then we have identifying, this is continuing section on this one. So the planning and risk assessment section provides all the principal guidance with regard to that, and it particularly identifies on the unique aspects on the planning and risk assessment, which are not there in ISAs. Like, for example, when we talk about inquiries of SSB and external Sharia auditors, some of the common things are there, but then in each of the area, there might be some of the unique aspects that are added in our requirements. With regard to materiality, we have taken comment of your point, Brother Daud, but I think, again, I would emphasize that putting the quantitative aspect is different, and putting the qualitative aspect on the Sharia compliance side will be always judgmental. This is something that we have already identified here. With regard to expert involvement, obviously we have talked about it, touches here again about the Sharia experts part. And then again, I'm just skipping this section quickly. Involving the auditor's expert requirements are aligned with ISAs, except for the Sharia part, which is more additionally considered. There is one specific action with regard to the reliance on the work performed by Sharia Supervisory Board, because as we discussed about the design part, a lot of work performed by the Sharia Supervisory Board, and their report is there on something we can place reliance. Some more details are covered in SOA 4 on this part. Similarly, we have to replace, in case where there is external Sharia audit also, you can place reliance on the work performed by external Sharia auditor. Again, for this one, SOAA 4 has a bit more detail. Then we have the analytical procedures part and the preliminary and analytical procedures, which are aligned with the ISAs. And obviously, the remaining requirements generally in the planning and risk assessment are generally aligned with ISAs. We are not going into that much detail as per ISAs, but we are providing a complete framework. Again, one of the areas which is unique, assessing and using the work of internal Sharia audit function. Internal Sharia audit function, like internal audit function, performs some of the activities that because it is partially independent, because it's independent of the management, although not independent of the institution. So still, because of its independent nature internally, some of the work performed by internal Sharia audit, like internal audit, can be used by the external auditor to reduce its extent of work. So this is something that we have covered, and it is more covered in detail also in the SOA 4. There is a comment from Brother Fahad Akbar Khan. Can external Sharia auditor go against the fatwa decision of the Sharia Supervisory Board of AAOIFI? I think, Brother Fahad, I explained that part through that explanation of the definition of the Sharia principles and rules, but let me repeat quickly. Sharia auditor, again, you are trying to put on external Sharia auditor. This is the financial auditor in this standard that we are talking about. We are not talking about external Sharia auditor, but either financial auditor or external Sharia auditor, they cannot go against the fatwa of the Sharia Supervisory Board if it is not in contravention of the first 4 criteria item. First item, AAOIFI Sharia standard, country Sharia regulation, central Sharia board rulings, AAOIFI financial accounting standard requirements related to Sharia, then Sharia Supervisory Board. So the first 4 items, if Sharia auditor or the financial auditor find a non-compliance of item 1 to 4, that is AAOIFI Sharia standard, country Sharia regulation, central Sharia board rulings, and AAOIFI financial accounting standards relating to Sharia, with regard to, for example, timing of recognition of revenue, with regard to not accrual of any interest, etc., non-discounting of established receivables and payables, things like that. I'm just giving example. In these areas, if you find a blatant non-compliance as an auditor or as an external Sharia auditor, you can put out it in your opinion. Again, I explained all of it. If it is an interpretation issue, still you cannot take the interpretation or judgment call. That judgment call remains with the Sharia board. Thank you very much, Brother Fahad Akbar Khan, for being with us, and thanks for your comment. Now, coming to the next point, internal Sharia auditor we discussed already, and again, the requirements that we have for use of the internal Sharia audit are similar to the requirements that are there for use of the internal audit function. So this is something that I will be not going in detail. Then again, on the execution part, we have audit sampling. We have some of the guidance on the sampling. We have some guidance on the some guidance on the control environment and test of controls. We have then obviously the minimum requirements of ISAs and the principle-based requirements are covered here. Then update of planned approach and combined risk assessment, substantive procedures or testing of details, as we call. These are all covered here. Again, at some of the places we have talked about some of the specific requirements for Islamic finance, like Sharia principles and rules, etc. So some of these are amended. Otherwise, the principle-based requirements remain in line with AAOIFI, with ISAs. Supervision of the audit work. Again, so it is part of the execution. So that is the minimum requirements are there. Consideration of fraud and error. This is one of the areas where we used to have a standard. There is a standard AAOIFI that actually talks about consideration, prevention and detection of fraud, etc. So while we have aligned the requirements here with the ISAs, but the fraud and error element related to Sharia principles and rules is also there. So this is something which we have touched upon in the auditor's responsibility part, and we have touched upon the professional skepticism that need to be applied in these situations, not only for the financial part, but also for the non-financial or the qualitative part, particularly the Sharia non-compliance part. Then identifying assessment, the risk of material misstatements and And then we go for the going concern requirements. Again, we don't go in detail for the going concern requirements. We have left the details to the ISAs, then audit materiality during the conduct of the audit. So some of the significant considerations with regard to Islamic finance we have talked about, including some of the qualitative materiality elements. Brother Daud, if you can suggest, because some considerations are here, some were there in the earlier section, and some are contained in SOAA 4. So if you can make more specific suggestion as wording to be improved like you did in other cases, we'll be highly appreciating, and we'll be requesting all of you to provide comments on that area. Then we talk about the representation part. Earlier, it was covered in standard number 3 on the terms of engagement part with the representation, etc. Some of the things were there as well. Again, representation requirements remain primarily in line with ISAs. Some of the details we have touched upon in the SOAA 4 as well. Then we have the related parties, we have contingent liabilities and commitments. Some of the specific considerations are part of this section. We have again a comment here. Let me just have it. So Brother Daud Ahmed has again provided further guidance on this one. Key missing areas in the auditor's report, no detailed structure on format. Brother Daud, as I mentioned, that detailed structure will be part of guidance note. As soon as we finalize the standard, we will be coming up with a guidance note as well. We have internally started working on that already. Lack of clarity on how the report shows Sharia finding and silent on handling Sharia non-compliance materiality qualification. Thank you very much, brother. I think the guidance note will address further details on that part, because again, it's a principle-based guidance, but we highly value your comments, highly appreciated. Each of your comment is taken note of. We will be taking them to the respective committee, and we'll try to make sure that maximum are incorporated here or in the guidance note, as we are going to start work shortly on the development of the guidance note. As soon as the standard is finalized, before its implementation, well before its implementation dates, inshallah, we'll be coming on the guidance note on the report part. Some of the specific consideration, I'm not going in detail for these because again, as the time is not sufficient. Then we have the documentation and archiving requirement, which are again aligned with the ISAs. Then we move to the conclusion of audit section, which is about review part. What are the minimum requirements for review? Then engagement quality control review requirements. These are, as I mentioned again and again, these are aligned with ISAs. Communication with those charged with governance is as per ISAs, but then we have involvement with some of the Sharia aspects are also there. So from that aspect, we might need to add some of the points related to that, but we have here communication with Sharia Supervisory Board, which is an additional aspect as compared to what we have there. Marjan, can you just make a note of it about the writing style, about running case and all these things? These are some of the things that I have noted. Just make a note of it, like this Sharia Supervisory Board and others. So there are some specific requirements here, because when you conclude and you have to make an opinion on the Sharia part as well, so then that stage, there must be a communication between the auditors and the Sharia Supervisory Board, because Sharia Supervisory Board has to place reliance on the auditor's report with regard to the implementation part, and auditors have to place reliance on the Sharia Supervisory Board with regard to the compliance to the design part, and also have to ensure that the judgment call of the Sharia board is taken with regard to Sharia principles and rules, like how they impact the report and if there is any corrective action. Because, for example, Sharia or the external auditor may not come up with a corrective action for it. So there was a transaction in which there was a Sharia non-compliance. Now, whether the transaction need to be reversed, whether the transaction can be corrected within Sharia paradigm, whether a contract amendment is needed, whether the amount of profit need to be paid in charity, etc. All these conclusions are to be taken by the Sharia board, not by the auditor. Auditor can identify that this is a non-compliance. What is the conclusion on that non-compliance is in the hand of the Sharia board. And that is one of the fundamental reasons that all the issues raised by the auditors are to be communicated to the Sharia board. And obviously, both of them have to rely on each other's report with regard to the element that is not covered by them in detail. Then we have the subsequent going concern assessment update, subsequent events review, and then we have the auditor's report part. This section on the auditor's report talks about the auditor report basic requirements. As Brother Daud has mentioned, that it does not provide a format. I mentioned in the beginning that the format is going to be part of the guidance note, not part of the appendix of the standard, because at times report format need to be amended time to time. So while the core principles remain the same, the format and contents may be improved. So that is the reason that it will be in form of guidance note. Even currently we have a guidance note on the auditor's report format, but this one will be improved after this one. So we have in this one, we have used the term primary opinion and supplementary opinion, but going forward, as I mentioned, the term will be truth and fairness opinion and the Sharia compliance opinion. So we have the primary opinion requirement, we have the supplementary opinion or the Sharia compliance opinion requirement. The elements of the report include title, addressee, the opinion in two parts, basis of opinion, going concern, key audit matters, management's responsibility for the financial statements, and then additionally the management responsibilities for compliance with Sharia principles and rules, then the auditor's responsibility for the audit of financial statement and the audit of compliance with Sharia principles and rules. Marjan, I just make a note of it. Responsibilities for the audit of financial statements and compliance with Sharia principle and rule. I just think we need to improve slightly the wording here in H2. Okay, audit of compliance or providing an opinion on compliance. Okay, I think we might need slight improvement here. I had noted it earlier as well. And then report on other legal and regulatory requirements, name of engagement partner, signature of the auditor, auditor's address, date of the report. Then next section actually provides a little bit guidance about each of the contents here. So I'll be skipping that one unless somebody has a specific comment. We have talked about the key audit matters here as well. We earlier had a guidance note on the key audit matters. Now we have put, after this one, the guidance note will be superseded and the requirements related to key audit matters in line with ISAs are brought in here. There is one major difference. We have said that key audit matters to be reported in the audit report should include primarily the financial statements or financial audit related key audit matters. Any key audit matters which are related to Sharia will be included in key audit matters reported only if they have a significant financial impact. If they don't have a significant financial impact on the financial statements, in that situation, those key audit matters will not be published. This is in line with the guidance note that we issued earlier. Only thing is that the requirements of the guidance note will now become part of this one. Why this is there? Because, you know, after 150 years of audit maturity, key audit matters became part of the audit of financial statements. So that industry has got, like industry and profession has got maturity of 150 plus years. Now we are talking about Islamic finance industry, which is new. It will be detrimental to the reputation of Islamic finance if all the key audit matters are put in the published audit report. And that is the reason that we have said that those key audit matters will not be published. Brother Sayyid Imtiaz Abbas Hussain has mentioned, I suggested detailed movement of riba need to be disclosed in financial statement, which should be thoroughly audited by the auditor. Brother Imtiaz Abbas Hussain, yes, it is already required in FAS 46 that any hiba, specific and general hiba are to be disclosed, and the new governance standards that we are publishing, we have published as exposure draft on the investment accounts addresses this issue. So I think we are with you that hiba should be used carefully and not just to replicate riba. It should be used only on need basis with subject to strict control. So the governance standard addresses it and the disclosure requirements are already there in FAS 46. Thank you very much, Brother Imtiaz Abbas. But it is the auditing standards. So again, auditing standards cannot have the disclosure requirements. So disclosure requirements are already there. So then we have these key audit matter requirements, and I provided you the summary of that. And then we have these full sections about each of the section. We have all these requirements and some of the guidance with regard to the qualification, disclaimer of opinion, etc. as well. With that, we come towards the end and we talk about the effective date. We are talking about originally 1 January 2025, we issued it earlier, but it's about the financial statement. So it becomes 2026. Now, what we are going to suggest here is 1 January 2027, as Secretariat will be suggesting that. We would love to have comments from the participants today on this part. SOAA 4 and SOAA 1 will become effective on the same date, inshallah. Amendments to other standards, obviously, they will supersede SOA 1, SOA 2, SOA 3, SOA 5, and which will also supersede GN 3 and GN 2. Oh, sorry, GN 3 will be issued and it will supersede GN 2. So here we complete the first standard, review of the first standard. I have taken a little bit more time over and above because I just wanted to complete this one before the break. Now we have two options. Either we continue for, not for 1 hour, obviously we have 45 minutes left. My suggestion, if all of you can agree, we can continue for 30 more minutes. So instead of taking till 1, we end at 12:45 Bahrain time, but we don't take a break now because right now we are in a continuity and rhythm. We can try to complete it, taking a break and then coming back will take some time. So this is my suggestion that we don't take a break now. Any disagreements to that? Yeah, prayer time is there, brother. I think prayer time is there, but Bahrain prayer time is started, but other countries' prayer time might have already started earlier. Brother Hamzi is in favor of continuing. Okay, let's try to be quick and short. Like, we'll try to complete in 20-25 minutes unless there are too many questions. So now I will share the presentation on it's not actually a presentation, it's actually the standard itself. That is the standard number SOAA 4. This is the ED. This is just in the PowerPoint format that I'm going to share with you guys. So let me take you through this one. I'll be fairly quick, inshallah. So we try to end like, maybe 12:30, 12:35, 12:40 maximum, inshallah. So now this is the standard which will supersede current AS4. Now what will it do? There were specific considerations with regard to Sharia principles and rules. Some of them were covered briefly in SOAA 4, but we felt earlier that there was a time when we felt that we can have only one standard. We can have only the framework standard, and that framework standard can be addressing all the needs. But so in that situation, SOA 4 was also be superseded by the same standard. But then we realized that there is more to it. There is some more detail that is needed. So we decided to keep it separate, which is addressing some of the key requirements. Now, this standard is addressing only one aspect, but again, that aspect is significant to the audit. That aspect is the what we call, as I said, the Sharia compliance opinion. So what are the additional considerations for the Sharia compliance opinion? Brother Nadeem Shahab, I'll come back to you. You mentioned about ISAs. So I say particularly on the laws and regulations. So what we did actually, we evaluated the standard on laws and regulation. I say on laws and regulation. We said that it is talking about primarily obviously the truth and fairness opinion. So it needs to be expanded a bit. So we tried to take the approach of the same standard, but there were some requirements of our earlier standard that we also covered. So we came up with a standard that addresses not only the primary opinion part, but also the supplementary opinion or the Sharia compliance opinion part as well. So it's improvement on that one. Obviously, the laws and regulation standard will still be applicable, but this is the additional requirement. And I would like to mention one thing. Considering Pakistan, considering any other country where the object clause reporting is also required and the laws and regulation include AOIFI standards like AOIFI Sharia standards, etc., this standard should always serve as a guideline for auditors, even if they are not adopting AOIFI standards. I would repeat, Even if any auditor in Pakistan is not following AOIFI standards because these are not adopted in Pakistan, is still, if you are performing an audit of Islamic financial institution, this standard will be a great help for you, even if you use it as a guideline. Again, this is something that that need to be considered by this. We have a comment from Brother Muhammad Ahmad. Is there any plan to issue the Code of Ethics? Brother Muhammad Ahmad, Code of Ethics is already issued 4 years back. So we already have in issue our Code of Ethics that is called AOIFI Code of Ethics for Islamic Finance Professionals. And for the purpose of Islamic Finance Professionals, we define that the auditors of Islamic financial institutions are also subject to that. So as I touched earlier in the SOA 1, that the ethical requirements include our Code of Ethics plus ISBA Code of Ethics, which applies on audit. So both of the Code of Ethics are to be applied by the financial auditors. So now we come to the standard. Since we have gone through a lot of introduction and discussions on the fundamental part, so I'll just push some of the slides fast. Now, this is one thing about rationale. So the additional aspect that we need to talk about are the information needs of the Sharia conscious stakeholders with regard to the transactions being Sharia compliant. That is one part, and the business model and transactions, that is the second part. This is in line with what we said in the SOAA 1. And this one obviously has some of the significant changes because it is aligned with the newer standards and it is aligned with the newer SOA 1. The objective of this standard is to prescribe the auditing requirements applicable to an auditor in respect of consideration for Sharia principles and rules in an audit of financial statement of AAOIFI or another institution that operates in line with Sharia principles and rules. Its scope is more or less similar to what we have in SOAA 1. Then we have definitions. So some of the additional definitions are there, but most of the definitions are similar as coming from SOAA 1. I'm not going to go in detail for these definitions in the benefit of time. There is a question that we would like to ask because there was always a discussion whether we repeat the definitions or we don't repeat the definition. There is one discussion, one view of within the board and committee was to repeat the definition. The other was not to repeat the definitions. But that is something that we would like to listen from you today. You can provide your comment or you can provide your comments in writing later. Now, coming to the auditor's responsibility with regard to this part, the overall aim of the audit, which is in line with SOAA 1, it includes that we have the truth and fairness opinion and we have the Sharia compliance opinion. As I said earlier, we used the term primary and second supplementary, but in the final version, the terminology will change to, and the board has already decided the terminology will change to truth and fairness opinion and Sharia compliance opinion. This is based on the initial comments that we already received on SOAA 1 and the initial discussion that we had in the boards and the committees with regard to making it more understandable. Brother Dawood Ahmed has again raised a comment. How should auditors verify Sharia interpretation if there are multiple valid opinions among scholars? Brother Dawood, that is the reason we insist again and again. We have a definition of Sharia principles and rules. We believe that Islamic finance need to work in a standardized and uniform manner. In order to provide that in standardized and uniform manner, you need to have a specific set of Sharia principles and rules to be considered what is Sharia for the purpose of Islamic financial institutions in a country or in the jurisdiction. Here, that is the reason that we ignore, with all due respect to the individual scholars, we ignore the individual scholars' views and we take it to the institutional view. For us, again, as I repeat again and again, the definition of Sharia principles and rules, again, I need to read it like this. Sharia principles and rules. So I forget what Sheikh Taqi says. I forget what Sheikh Nizam Yaqubi says. I forget what any of the important scholar like Sheikh Kahlan, anybody in respective country says, or any individual young scholar, senior scholar, we forget about it. We say it is an institutionalized framework. In the institutionalized framework, you cannot go and have individual opinions. So what we say, Sharia principles and rules comprise the Sharia principles and rules defined by the following hierarchy as appropriate. Sharia standards of AOIFI, regulations of the country Sharia regulations, rulings of Central Sharia Board. And this is hierarchy, which means Sharia standards supersede country Sharia regulation. They supersede the ruling of Central Sharia Board. They supersede the requirement of applicable financial accounting standard as issued by AAOIFI insofar as entail Sharia related requirements, and approval and ruling given by Sharia Board. Even Sharia Board of the institution itself is an institutionalized entity. So brother, this will remain subordinate to the views of the Sharia standards, Central Sharia regulations, etc. This is the way, and this is the only way, my dear brother Daud, that we can try to have uniformity. Otherwise, individual views will always remain there. So flexibility available within this paradigm, okay, within that you can take the views of individual scholars. But if the flexibility is not available, then you cannot go. So for example, there can be different situations. One example is Central Sharia Board, the AAOIFI Sharia standards allow tawarruk subject to certain conditions. Central Sharia Board in Oman does not allow tawarruk at all. Okay, because it's not going in contradiction. AAOIFI standard is not saying that you do tawarruk again and again. No, it says that tawarruk can be used in need basis. At the country level, Oman Central Sharia Board decides that we don't want to consider that tawarruk is such a need that we allow it. This is the situation that applies in a lot of situations where you cannot go against. So for example, if you go against a requirement of AAOIFI standard, like for example, AAOIFI standard says that tawarruk should be a clear 4-party transaction. Now you are doing 3-party transaction. Even if your Sharia board approves, it is not in line with the Sharia standard. It means it's a non-compliance. One last thing, we respect each individual scholar. We respect each individual scholar's view. But we can tell you that no system can work if you go with the individual views of the scholars. You need to establish something as a regulation. You need to establish something as a law. That is the only way through which you can ensure that the robust, resilient system is in place. That is the objective of AAOIFI, to have a resilient, robust system for Islamic finance in place, which ensures safeguarding of the interests of the stakeholders and which ensures Sharia compliance as the prime consideration. Then we have broad classification of Sharia principles and rules. So first part is what is relevant to accounting and financial reporting, and number 2, what is not relevant to financial reporting and accounting and financial reporting, or which may not individually, which may impact individuals, but not material at the gross level. So brother Nadeem Shahab, the point that you raised would be addressing, if we limit it to the IS's requirement, the part 1 will be covered, but part 2 will not be covered. But we believe that part 2 is equally important, and that is the reason that we have to cover. And so we said that for Sharia principles and rules that may not affect the auditor's truth and fairness opinion, but with regard to Sharia compliance opinion, all of the above categories may be relevant. Again, there is a comment in the Q&A tab, brother Dr. Omar Quddus Attari. Practically, there seems no difference between tawarruk and bayina if conducted through the party. Why first term is allowed, not bayina? Brother Muhammad Umar, we don't want to go in detail, but you are correct. That is the reason that AAOIFI doesn't allow 3-party transaction. Then we have the opinion responsibility. What is the auditor's responsibility with regard to the first opinion? What is the auditor's responsibility with regard to the second opinion? How these are impacted, like we talked about, very important thing that we said that certain accounting and financial reporting treatments in the financial statements, including establishment of contractual rights and obligations, etc., they are actually, so for example, profit distribution. They require financial reporting framework. There has to be a proper financial reporting framework. So you need to follow that, and you need to follow appropriate requirements. So then we have auditor's responsibility with regard to the truth and fairness opinion. So even within the truth and fairness opinion, these are the aspects that are impacted. So auditor need to have full consideration of all of these aspects that we are covering in this paragraph 9. And then this 10 also explains on that part. And then we come to the auditor's responsibility with regard to the Sharia compliance opinion, which means that all of the aspects as above, and in addition to that, additional elements are to be covered. And for the truth and fairness opinion, for sure, you have the materiality considerations, which are primarily quantitative. But when it comes to Sharia compliance opinion, some of the considerations become qualitative, not instead of quantitative. And then these are the additional considerations that impact your opinion or your work, which are covered in these sections with regard to the respective responsibilities. Then we have talked about the effective implementation of Sharia principles and rules. So about the controls and the system of governance that is there, we have some requirements. Then here we have talked about some of the limitations, that there are some inherent limitations in audit. So the auditor may not be able to and may not be held responsible for identifying all of the requirements here. Then we have again those the limitations are covered here. Then we move to the my apologies. So the limitations part, after the limitations, we covered a very important part in the management and those charged with governance responsibilities, which are there for this purpose. Again, this cross refers to the SOAA 1, where we have some more details on that part. Then there are some compliance requirements. So some of the compliance requirements are already there, mainly in SOAA 1. But some of the requirements we have touched upon here as additional requirements, or just an emphasis on some of the requirements which are there in SOAA 1 with regard to this one. Determination of the principles and rules is very important, because it's saying that AAOIFI Sharia standards is applicable is not enough, because Sharia standards are detailed. So how they actually apply and how this hierarchy actually applies and how within the legal framework these things are implemented, this is something on which further work is needed by the auditors. Suitability of the Sharia principles and rules, whether with regard to the transactions, whether suitable or not. And obviously, if suitability issues are there, even a withdrawal from withdrawal or disclaimer of the opinion, withdrawal from the engagement or disclaimer of the opinion will be needed. Interaction with the Sharia supervisor, that is the Sharia supervisory board mostly, that is one of the requirements here. This is in line with other requirements of the AAOIFI standards. And then risk of non-compliance with Sharia principles and rules. Some guidance was there in SOAA 1. We have provided additional guidance in SOAA 4 here. Then we have the governance and control environment assessment. Obviously, that has very much impact on how you actually assess the final combined risk on you that can impact your impact your opinion. Then about materiality, we have touched upon certain additional aspects here, while more details are already covered in the SOAA 1. Then involvement of the expert, we touched upon it in the SOAA 1, but here we have talked about a little bit more on the involvement of the expert, including the expert on Sharia part and expert on the financial accounting framework part. We just discussed earlier that the reliance on the work performed by SSB, there was a couple of paragraphs there, but more details, how actually you do it and what work needs to be performed on that part is covered here. What are if you want to put reliance on the work performed by SSB, this is like, a little bit more detailed and expands on that. Similarly, reliance on the work performed by external Sharia auditor, particularly if the same auditor is doing it or if a different auditor is doing it. So how you place reliance and what are the minimum work to be performed in that part. I can see another comment here today. Alhamdulillah, it has been a very interactive session. Again, Brother Dawood Ahmed is again, what measures are proposed to ensure auditors possess the requisite knowledge and expertise in Sharia principles? Brother Dawood, here in the expert involvement, earlier in SOAA 1, in the quality management requirement, in this requirement, we have put it. Now, AAOIFI is the standard setter. AAOIFI is not the implementer. Now, it is the regulator and the auditing profession regulator in respective countries. So the banking or in the financial institution regulator and the auditing profession regulator. It can be the Institute of Chartered Accountants or the Certified Public Accountants. It can be the body like KJK in Turkey. So whatever the body is responsible for ensuring the quality within the country for the auditing profession. That is the body that is actually going to get the standard implemented in the countries where AOIFI standards are adopted. Then in this section, we are talking about the minimum substantive procedures that should be done for ensuring compliance with Sharia principles and rules. So this paragraph 40 provides a list of those minimum procedures, and then non-compliance brought to attention by other audit, but other auditor or yes, Majan, just take a note of it. We need to just check the heading again. So general audit procedures may, by other audit procedures, I think we are talking about, because general audit procedures may result in some of the non-compliances that can be identified on that part. So while, for example, reviewing the minutes, etc., you can find out some of the issues or challenges that are related to Sharia compliance. So that need to be done. Then again, audit procedures when non-compliance is identified or suspected. So you need to enhance the procedures. You need to perform additional procedure. You need to try to get additional evidence. These are the requirements which are contained here. And then we move to the next section about additional procedures to identify instances of non-compliances, which may not have a direct effect on the financial statements, but may still have reputation risk, punitive actions by the RSAs, and eventually, hurdles on continuing of the operations of the institution. So these are the things which are additionally covered here. Professional skepticism, we have touched upon a bit again on this one. We have a little bit expanded on that part, what is covered in SOAA 1. What are the specific aspects that you need to cover from this professional skepticism perspective? Let me add that these are some of the so let me read it out very quickly, that some of the very important matters that are covered here: unjust or illegitimate advantage to or against counterparties, breach of contractual obligation and non-compliance of Sharia principles and rules in respect of establishing right and obligations, misuse of funds provided by participating stakeholders, concealing or omitting facts, misleading SSB, repeated violation or misinterpretation of Sharia principle and rule, manipulation of documents and records. So these are some of the very specific professional skepticism aspects that need to be covered. This is one of the significant value addition by this standard. Then we have requirements for written representations. So some of the minimum requirements for written representations are covered here. Unique aspects of AAOIFI's audit because of the business model and product structure. Again, this paragraph 53 and this section covers some of the very important issues like general stewardship and fiduciary responsibilities. Again, like the section that I referred earlier, this one is providing a crux of the standard, like general stewardship and fiduciary responsibilities, what need to be done. Then what we have, specific fund management and reporting, what are the specific requirement of balance sheet assets under management, completeness and relevance of information. These are the topics that we have touched upon in this one. We would love to have your comments specifically on some of these things, because these are pure value addition by AAOIFI standard here. Then again, we have requirement for documentation and archiving and the conclusion of the audit with regard to, and then we have some details with regard to communication with SSB and making the draft auditor report available to SSB, etc. Some of these things were touched upon in the SOAA 1, but here we have come in detail. Then with regard to the reporting elements, that how it impacts the report, truth and fairness opinion and the Sharia compliance opinion, how these are impacted by these things. So these are some of the things that are creating a specific requirement. And then again, this one has an effective date of 1 January 2027. I think that SOAA 1 will also be required to be put on the same date. That is our suggestion as Secretariat, but we'd love to listen from you. So I have been a bit quick on this one. We know that both of these standards are quite detailed. It was not possible for me to read them out, but I think we were able to discuss the conceptual part. We were discussed to address all the questions that were raised till now and the comments that were raised, and we were able to cover the contents of the standards briefly. As I earlier mentioned, that since we didn't take the break, we want to end today's session early. So I have stopped my presentation here. We are done with the presentation. Just very quick, in a couple of minutes, if we have any questions, we can take those questions before I hand it over to Beck. There is comment from brother Atif Malik for the slides. In the slides, we don't share the link to the PDF version is already available. It's exactly the same. The PDF version of the standard, which is on the website, is exactly the same. Sisters will provide the link to the PDF version. Again, it's already there on the chat window. I cannot see any other comment coming up. Okay, in the Q&A tab, we have one comment. Many thanks for all the explanations. Just one more question. What mechanism will ensure the auditor's independence from the SSB? Brother Daud Ahmed, I think you have a good point, Brother Daud. You have a good point. I think we will see this one. If we'll just see to what extent this independence is impacted by the SSB. So we take your point positively. I don't have an answer to that. We'll consider it at the committee level. Brother Mubashir Ali has a comment. Can we have recorded video? Now there is a question to the team, sisters, just to confirm it is live or not on the YouTube.
Brother, we had a technical issue, so we will upload later, inshallah.
Okay, all the videos are always live on YouTube, so they are recorded. But as sister mentioned that today there was a technical glitch. Just make sure that in future this issue is resolved, because it happened a couple of times earlier as well. But this recording will be uploaded as soon as possible, inshallah. All AAOIFI public hearings, if you want to refer to any of the public hearings, even if you want to go through them as a training session, you can always go through AAOIFI's YouTube channel. AAOIFI's YouTube channel has all the conferences, public events, public hearings, videos available. For a huge data is available. So we have a couple of comments here. Additionally, Nuruddin Rahimia, I have a general question about it's possible or not to include examples. Yes, we will try to provide examples in the guidance note, not in the standard itself, because standard is principle based. But thank you very much. We'll try to add more and more examples in the guidance notes, inshallah. Brother Muhammad Ahmad, can you please give a word on independence regarding non-assurance services? I think it's a good point, Brother Muhammad Ahmed. I think independence, since we have kept the requirements with regard to the quality assurance and quality management, that is already there. But I think providing non-assurance services by the financial auditor, I think something need to be added. Sister Marjan, if you can take a note of it, because the general requirements of ISAs are there, our ethical requirements are there, but maybe we need to touch upon in SOAA 1 or SOAA 4. Maybe SOAA 1, we need to touch upon a little bit about non-assurance services specifically. Thank you very much, Brother Muhammad Ahmed, for your kind comment. And here I stop and I hand it over back to Sister Zahra for the closing session.
Thank you very much, Brother Umar, for the presentation, and thank you for the attendees. Also, of course, we have to extend our sincere thanks for ICAP and State Bank of Pakistan for their collaboration and support. As I mentioned at the beginning, we have 2.5 months until the end of the consultation process. So you can share all your comments on governance@aaoifi.com. And stay tuned, inshallah, and check our websites and social media platforms for the details about our upcoming public hearings. We will have 2 more in English and 1, inshallah, in Arabic.
I think, Sister Zahra, it would be good to remind about the conference.
Yes, next week, inshallah, Sunday and Monday, 20 and 21st of April, we have our Sharia conference held physically in Bahrain. It's also going to be like podcast on YouTube. So if you didn't register yet, we can
Zoom also. You can join in through Zoom and available on YouTube
and online. The agenda is also available. Alhamdulillah, we have good number of registration. We hope to see you, inshallah.
I can see some comments on the chat window for thanks. Highly appreciated, everybody. Thank you very much for being here with us. It is all of this is important because we want to have your input. Your presence here makes great contribution to AAOIFI. Thank you, everybody. Assalamu alaikum.